Good afternoon, sir.
انت شيء اكيد كريه ما شايف بس شنو هي कंगा देखना कंगा
चार्ज को लगा
ये किसका है
स्विच ऑफ है।
ये नो चार्ज इसमें जाओ उधर मेरे रूम में है ना चार्जर
Good afternoon, everyone. हेलो अतुल जी, विश्वास जी,
Good afternoon, sir.
थैंक यू वेरी मच। हमारे तकरीबन 10 साथी हमें यहाँ ज्वाइन कर चुके हैं, तो 5 मिनट में बाकी साथी भी ज्वाइन करेंगे। हमारे नेक्स्ट फैकल्टी हमें यहाँ ज्वाइन ऑलरेडी कर चुके हैं, तो आपका सेशन हम यहाँ से कंटिन्यू करवाते हैं। टिल इवनिंग तक आपका सेशन अब सर के साथ ही रहेगा। तो आपका इंट्रोडक्शन आपके नेक्स्ट फैकल्टी से कराते हुए अब आपका सेशन सर को हैंड ओवर करते हैं। सर ज्वाइन कर चुके हैं सर आप, तो आप प्लीज़ कैमरा ऑन कर लीजिए। मिस्टर के एस नागाराजाई, सर सुन सकते हैं मुझे?
यस सर
कैन वी शैल वी स्टार्ट सर?
यस सर यस सर यस सर
प्लीज आपके एक छोटे से इंट्रोडक्शन के साथ, बिकॉज मेरी आपके साथ तो मेरी दरअसल सर से आज पहली मुलाकात है। तो सर का अगर एक छोटा सा इंट्रोडक्शन हो जाए तो उसके बाद हम सेशन यहाँ से कंटिन्यू कर सकें। सर आर यू एबल टू हेयर मी सर?
यस सर यस सर
प्लीज कंटिन्यू कर सर। आपका एक छोटा सा इंट्रोडक्शन हो जाए, बिकॉज मेरी तो आपसे पहले ही मुलाकात है, तो हम सेशन यहाँ से कंटिन्यू करेंगे।
ओके सर आई विल इंट्रोड्यूस माय सेल्फ so good afternoon one and all. So myself I am Nagarajaya from Bangalore. I am a registered valuer. So today's MEP session is with respect to the real estate valuation. So in this class, so I think so this will be a marathon class, so that it will be running for about 4.5 hours, I think. So in this 4.5 hours, I am going to share nearly about 150 slides. I know very well that all of you are the IBB aspirants who are going to appear for the IBB examination. See, if you listen to my words, otherwise if you listen to my slides, all these 150 slides, so you are not necessary, there is no necessity of referring any books at all, not to refer any study material. You just listen my words. I am going to explain the all theory, and also I am going to give some hints regarding the MCQ also. where actually you will go wrong, where actually they will ask some MCQ and everything. And this real estate valuation syllabus which I am going to cover is for 9 marks. So in this 9 marks is from the 9 topics are there. 9 topics, 9 marks. Okay. Now I am going to share the slides also. So for all of you, my screen is visible.
Yes, sir.
Okay, my screen is visible, sir. So let us start the session. Sir, please unmute and tell me, sir, whether it is visible or not. My voice is audible or not.
Yeah, it is visible and your voice is audible.
Okay, sir. Okay, sir. Thank you. Okay. So today's session is on the valuation of the real estate. I'm going to cover the entire syllabus for the 9 marks. Okay. In this 4.5 hours of the session, I'm going to cover the 9 topics. Okay. So totally there are 9 topics and 9 marks. MEP hours is for the 4.5 hours. So that is a 270 minutes. So for each topic, I'm going to take 30 minutes. Okay. So for the 25 minutes, I will explain the entire topic, theory as well as some hints regarding the MCQ. So after 25 minutes, we will have a question and answer session for 5 minutes. Okay. Suppose if you have got any doubts regarding that topic, so you can ask any questions and you can clarify here itself. Okay. Now, in the syllabus, the first chapter is the cost, price, and the value. So usually your MCQ question will be on cost. What is cost and what is price and what is value? So before understanding the difference between the cost, the price, and the value, let us try to understand what is meant by valuation. Valuation of the property is a very old concept, right from the civilization of mankind. The development of the community settlements to also gave rise to the system of exchange commodities between the different community groups. This system is called a barter system. That means when there is no money at all, so they are going to exchange the things for some other things. Okay, so that we call it as a barter system. So usually one question will be asked for the multiple choice question regarding what is meant by the barter system. So it is the exchange of goods to one commodity with the other commodity, that we call it as a barter system. And this exchange of goods was evaluated in terms of money. Ultimately, settled prices of the commodity between the willing buyer and the willing seller. Price is nearly close to the estimated value. This is the exact process of the valuation. So this is only a brief introduction. Okay. Now, what actually mean by the cost? Cost is actual expenditure in terms of money incurred on both materials and the labor. For example, you take what is the cost incurred on a building? So it involves 2 types of things. One is material cost and another is a labor cost. So material cost plus the labor cost. So that will give you the total cost of the building. So don't confuse yourself with the cost is a different factor and price is different and value is a different. Okay. Next, what actually meant by the price? So on the cost, we need some profit. We need some profit. When some profit is added to the basic cost, so that will become a price. So it is an amount paid and expressed in terms of money for acquiring ownership rights or interest in the assets. It is a combination of cost plus profit of an asset. See, I have constructed a building. So for the building, what I have invested? I have invested some materials. For that I have paid some rupees, and for that I have invested on the labor. So for that I have paid on some amount. So total material cost plus labor cost will become the cost. So if I want to sell that sell that building, I need some profit. When that profit is added to the price, when the profit is added to the cost, so it will become a price. Now, what actually mean by the value? Value is a settled price of the commodity in between the willing buyer and the willing seller. Value, see, I may be expecting a profit of about 20%. I may be expecting a profit of about 30%. But on negotiation with the willing buyer and willing seller, so it may comes to 10% or the 12%. So that we call it as a value. So we have a clarity in your mind with respect to the what actually meant by the cost, what actually meant by the price, and what actually meant by the value. So cost is different, price is different, and value is different. I think with a small example, I have cleared what is the meaning of the cost, price, and the value. Okay. Now, what is the definition of the market value as per the International Valuation Standard Committee? That is IVSC. So all of you know very well. So that is a arm's length transaction, and market value is estimated amount for which an asset should exchange on the date of valuation between a willing buyer and a willing seller. See, that is very, very important. Willing buyer and willing seller in an arm's length transaction after properly marketing, wherein parties had each acted knowledgeably, prudently, and without compulsion. So this is the definition of the market value as per the IVSC. So what actually mean by the arm's length transaction? So this will be your multiple choice question in the examination. It means that the transaction between the related buyers and the sellers only, and not between the close friends, that the transaction should be ignored. The sentimental or the social condition are to be ignored, and both should have the basic idea regarding the market and also ordinary prudence and the transaction with the normal business practice. So that we call it as a arm's length transaction. See, that the transaction should not be with the close friends. Why? See, if they are close friends, means they will be having some understanding. Say, I am making this much of value, otherwise I am giving for this lower value. So they should not be there. So that is the meaning of the arm's length transaction. And the transaction should not be between the relatives or the friends. Okay. So it means that the transaction between the related buyers and the sellers only. Okay. Next, what are the qualifications and the functions of the value? Why we need to understand the real estate valuation, economics, accountancy, and all these things, and statistics. Why it is necessary for the valuer? Say, valuer is an expert who can work out on the market value of the property based on scientific analysis and instances of the sales. A good valuer is an engineer or architect who must possess the sound knowledge of the following subjects. So what are the subjects? That is estimating and the costing, surveying and the leveling, planning and designing, experience in construction works, building bylaws of the local bodies, law of easements, law of contracts and arbitration, land acquisition and town planning act, fire insurance, central and local governments taxation rules, money market and rate of interest, zonal importance of the land and buildings, skill of writing reports. So these are all the qualifications and the functions of the valuer. See, in this 50 hours of MEP program, so don't worry. So you're all going to learn the entire subjects, starting from the valuation of the real estate to the till the writing of the valuation report. Say how to write the valuation report and what are the different types of the reports and everything. Okay. See, why I am taking this valuation of the real estate means, so this is the fundamental for all approaches. This is the fundamental for all approaches. I don't know, so whether you started with the other subjects or not. So this valuation of the real estate forms the basis for the entire real estate valuation. It may be for the income approach or the cost approach or the market approach, and also with respect to the laws and report writing and for everything. So this will be the basis. And see, as a valuer, you should understand this valuation real estate very well. And in this valuation real estate chapter, I'm going to give some fundamental basics with respect to the sinking fund, capitalization rate, and also annuity and year purchase and redemption of the capital, etc. and etc. See, these are all the fundamentals in the valuation. Once if you know this very well, then only you will be able to answer for the case studies. Because in the next Friday, I think I'm going to take the case studies also. Okay. So it takes that may be for about 4 hours or the 5 hours. I don't know the exact timings, but I am going to take the case studies. See, if you want to pass the IBBA examination, you must and should attend the case studies. That is very important. See, without attending the case studies, it is very difficult to pass the IBBA examination. Okay, so you must and should attend the case studies. So if you want to attend the case studies, you need to work out on the basics. So that means, what is a sinking fund? What is a sinking fund formula? What is a capitalization rate? What is capitalization formula? What is a single rate IP? What is single rate YP? And what is a dual rate YP? So etc. Otherwise, see, without understanding these basics, so it is not possible for you to attend any case studies in the examination. So in this class, so there is a valuation of the real estate class. I'm going to explain what is a capitalization rate, what is a year purchase, what is annuity, and how to arrive with a small examples and a small case studies and a small case study calculations. I will explain everything. So this will form the basis for your next case studies. So that is what I want is all of you just go through this evaluation of the real estate very well, and whenever you attend my next class for the case studies, so you just go through this all the slides and also the worked examples and the meaning of the annuity, meaning of the capitalization rate, and meaning of this sinking fund and redemption of the capital, reversion of the value, net present value. So everything, because whenever I take the case studies on next Friday, I will directly take the problems, and I am going to solve the problems. Then you should not ask, sir, how you have got that formula, how you have got this formula, because and everything I will explain today only. See, what are all the formulas involved in the capitalization rate, what are all the formulas involved in the YP single rate and YP dual rate, and also what is meant by the redemption of the capital, what is meant by the reversionary value, and how to arrive it with a simple examples. I will explain everything. So in the next case study class, so please come prepare yourself with what is meant by YP single rate, YP dual rate, and with all this fundamental knowledge. What is meant by real property, what is meant by the real estate property, what is meant by personal property. So if you come up with all these things, so the case studies class will be very easy for you. Otherwise, see, without attending the case studies, because I think for the case studies, how much will be there? Case studies, it will be around 26 marks, I think. So 26 marks. So in the examination, out of 100, 26 will be for the case studies. So without attending the case studies, it is not possible for you to pass the examination. And so this is the first chapter in the real estate valuation, I think. So this is one of the easiest chapter where you can grab this 9 marks very easily, and not necessary to study any study material at all. I think that even the AARVF has shared some study material. I think that is more than sufficient. You just go through my slides, you listen to my words, and you just go through the study material provided by the AARVF, and you directly attend the examination. You will definitely get the 9 out of the 9 from this chapter. Okay. And as far as the case studies is concerned, so today I'm going to share some formulas. So you be well prepared with those formulas, and study that the definition for the annuity, YP single rate, YP dual rate, capitalization rate, and net present value. So once or twice before attending my class, that is a case studies class on Friday. Okay. So next, classification of the property under the Transfer of the Property Act. Again, it is not my syllabus, but from the point of understanding this real estate valuation, I'm just going to give some hints regarding this one, because in future classes, I don't know whether you already attended the classes or not. So if you have attended, it is well and good. If you have not attended, you are going to attend the classes on income approach, market approach, and the cost approach. But for the time being, just to cover this syllabus, so you need to understand. So what are the classification of the property based on the Transfer of Property Act. Again, you are going to study, I think, law real estate. So where Transfer of Property Act, leasehold rights, and also the LARA Act, Land Acquisition Act, Hindu Succession Act, and all these things in the law real estate, I think. Now, from the point of today's lesson or the today's topic, let us have a brief introduction regarding what are the classification of the properties based on this Transfer of Property Act. So based on the Transfer of Property Act, the properties are classified into income fetching marketable properties, non-income fetching marketable properties, non-income fetching non-marketable properties. See, I think so below that line I have given the examples also so that you can understand very well. See, income fetching marketable properties means rented properties like the hotels, cinema, shops, or any commercial buildings, malls, etc. Next, non-income fetching marketable properties, owner-occupied bungalows, residential houses, individual houses, flats, offices, shops, factories, etc. Non-income fetching, non-marketable. See, temples, schools, college, public buildings. See that we call it as a government buildings. So they are non-income fetching, non-marketable properties. So these are all the classification based on the Transfer of Property Act. But from the point of valuation, so we are going to value the properties by the three approaches. One is the income approach, market approach, and the cost approach. I think so we'll be having a class regarding the income approach in the detail, and market approach in detail, and the cost approach in the detail. Okay. Next, so this is pertaining to this chapter only. So the first one, as per the syllabus, is the cost, price, and the value. Now you know very well how to distinguish between the cost, price, and also the value. Now, see, they will have some multiple choice question with respect to different types of value. There are 100 types of values. 100 types of value: accommodation value, book value, distress value, fair market value, realizable value, speculative value, and value in exchange. See, there are 100 types of that. But as a valuer, it is better at least if you have a knowledge of at least 20 to 25 different types of values and how to arrive it and what is the definition for it. So once if you just go through the definitions of all these 20 or 21, definitely you will get one question, either on the cost or on the price or the value or the different types of value. Okay, so let us discuss one by one. Suppose if you get some other question other than this, say what I have here I have quoted about 21 types of value. If you come across any other question, any MCQ questions, so don't forget to share that questions to my WhatsApp number. So to get, suppose if you are not having a clear answer for that, so I will be able to give the right answer through the WhatsApp. So you please note down my WhatsApp. Otherwise, you can contact through WARVF also. Suppose it may be for the case study, or it may be for the any MCQ, or it may be for the any questions which you are unable to understand in the examination. You kindly share that question, MCQ, or the case study through to my WhatsApp number. Otherwise, you can contact through the WARVF. I will be able to give the answer for your MCQ and also for your case study to my best of my knowledge. So this class may be for about 4.5 hours, but I will be with you forever so that until you pass the examination. And those who have attended my MEP program, they are all of 90% of them have passed the examination in the first attempt itself. They have passed the examination. Now, what I want is all of you to pass the examination in the first attempt itself. So don't hesitate to ask any questions, any MCQs, any case study with respect to the land and building. See, I may be taking only the valuation of the real estate today. So if it is pertaining to some other chapter also, feel free to ask, share that question if you don't know the answer, so that I will be able to provide you the answers to the best of my knowledge. Okay, so let us discuss what are the different. So I think all of you are listening. I think all of you are getting a sound sleep because after having a good lunch, I think.
Sir,
No, sir, we are listening to you sincerely.
Oh, yes, sir. Please, sir. Suppose
Sir,
if you are
please-
having any doubt or like that, you just no. After every 25 minutes, we will have after the completion of one or two topics, we will have a session. That's a question and answer session, so that for about 1 or 2 minutes or for the 5 minutes, so that if you are having a doubt, you just make a note of it and you can ask the question and you can clarify here itself. Okay. So what is that accommodation value? Accommodation value means it is only the adjusted value. It is only the adjusted value. Why it we call it as an adjusted value? Suppose if the site is in the odd size or it is a landlocked property, it is some legal issues are there. Then in such cases, it is not easy for us to arrive at the market value. So that means we have to adjust, we have to accommodate properly. So that we call it as accommodate value, and it will not be a market value.
कर बहुत कम है
Sir. Next, the book value.
सॉरी सर
Okay, sir. So what is meant by the book value? See, it is a book value is usually, see, that will be mentioned in the balance sheet. See, book value means, see, that will be on the record. For example, see, when a property is registered in the sub-register office, it will be for this about 50 lakhs. But the actual value of the property is about 1 crore. But he has registered the property for the 50 lakhs. So that 50 lakhs, see, we call it as a book value. 50 lakhs. For that 50 lakhs, you can add that stamp duty value also. So it is the stamp duty charges also. So it may be for about 2 lakhs or 3 lakhs or whatever it may be. 50 lakhs plus 3 lakhs, that is the stamp duty value. That will become the book value. See, that means, see what actually it is recorded on the deed or what actually recorded on the balance sheet. So that we call it as a book value. Distress value. The property is sold by the owner in a distressed condition. That means in urgency. So that is what happens in the real estate. That means if you want to sell any property, either a land or the building, in urgency for the marriage of your daughter or some health issues of your wife, father, mother, or the relative, or whatever it may be. In such conditions, so what happens is, so the owner will be in the urgency. So in such cases, even though the property fetches about 1 crore in the market, so you will be ready to sell that property for about 80 lakhs or the 90 lakhs. Okay, so that we call it as a distress value. That means in a compulsory sale. So that means in urgent you want to sell the property. So that we call it as a distress value. And fair market value. So that means based on taking some circumstances and also the market conditions, what we are going to arrive, that we call it as a fair market value. Forced sale value. This is an established value of the property that would realize in the open market in short time. So there is no much time at all, in a short time. So action of NPA assets by the bank. So that we call it as a forced sale value. So that is why, so usually a bank wants us to mention what is the forced sale value, what is the fair market value, and what is the realizable value. See, what is the rateable value? Rateable value means, so usually the tax authorities, it may be the income tax authority or it may be the revenue authority. See, they want to assess the tax for such properties. So to assess the tax for such properties, what they will do is, so they will do the valuation of the property. Okay, based on the value of the property, they will fix the tax rate. So that value fixed by the taxation authority, maybe any authority, either the income tax department or the sales tax authority or the GST or the revenue department or whatever it may be, any local body or whatever it may be. So that we call it as a rateable value. So intrinsic value, it is an actual values or true value of the property. But in India, there is a lot of difference between the true value and the guideline value. So I think all of you know that is a true value means, and see the transactions will be the black and white, where they will give some black money and they will register for the only the guideline value. But nowadays, because of the digitalization and also some statutory rules and regulations, it is most of the owners they are registering their properties for the same value. There's no black money transaction has been cut down right now. Okay. Say monopoly value. Some properties in a prime locality due to its location by virtue will fetch more or fancy value is called a monopoly value. Okay. Potential value. This is the value of the property with the existing entity. See, the definition themselves are explanatory. not necessarily to give the more explanation, because you're all engineers and valuers and you're having the basic knowledge of the valuation and everything. Only just to pass the examination, you're taking the MEP of the 50 hours. See, MEP of the 50 hours, it doesn't mean that just by attending the 50 hours of the session, you can become the valuer. No, it is not like that. See, it is just a orientation program. It is just a rehearsal program, this MEP, because assuming that you're all professionals, see, they have prepared this syllabus. So that just to give you the highlights of the entire syllabus and the entire topics. Okay. And don't feel yourself, see, within the 50 hours, is it possible to complete so much of lessons, so much of theory, and is it possible to study so much of aspects and everything? Okay. See, assuming that you're all well-established engineers, valuers, and they have prepared this syllabus and they have made it only the 50 hours as the mandatory educational program. Okay. So replacement value. So usually in the cost approach, we always we are interested in the replacement value. So that plays a very important role in arriving the valuation of the property by the cost approach method. So reported value or the appraiser value or the assessed value, it is the final value of the property assessed by the valuer after the thorough assessment. So it may be with different procedures or different formulas, or by adding or subtracting, or by adapting the different principles of the valuations. So that means there are about 12 or 13 or 15 principles are there in the valuations. By adapting all those principles, if the valuer has arrived some value that we call it as the assessed value or the appraisal value. Salvage value, it is an estimate of the sale price of the old property after its probable service useful life, but it is still continued due to its physical condition. So that is a salvage value. And scrap value, it is the value of the property receivable for its material content in the market when it is completely useless for future. So kindly make a note of the difference between the salvage value and also the scrap value. So scrap value is also known as a zinc value, because always the valuers will have a confusion between what is meant by the salvage value and also the scrap value. Okay, kindly make the difference between these two values. So usually sometimes the MCQ will be on this salvage value and the scrap value. Okay, sentimental value, it is the value of the property who determines on the sentimental grounds rather than the market force. So it may be for the lower price or it may be for the higher price. So because of based on the sentimental ground, so the value will be fixed. Speculative value. See, speculative, it is the value of the property to the speculator who invest the money. Speculator means, see, there are some buyers, see, who will be having much money. So they'll be having a lot of money with them, and they want to purchase some properties. Say, for example, if any project is launched, a new project is launched, they are going to book about 50 flats, 25 flats, 10 flats for them. So what they will do with 10 flats? They are all speculators. That means they will invest money and they will wait for about 1 year or 2 years. After 1 year or 2 years, they will sell the property. So they will call it that we will call it as a speculative buyers. So speculative value means since they are purchasing about 10 or 12 properties or in a bunches, so they will purchase the property for the lesser value and they will sell one by one for the higher market value by making the profit. So capitalized value of the property is the amount of money whose annual interest at higher prevailing rate of interest, which will be equal to the net income from the property. It is assessed by knowing the net income from the property at the highest rate of the interest. So don't worry about this capitalized value, because so in the 7th chapter, I'm going to explain what is meant by the capitalized value, how to derive the capitalization rate with the small examples. So because that will become the basis for your case studies on Friday. Okay. So realizable value, it is defined as the estimated selling price of the property in the open market less the cost of completing in the sale transaction. It is thus the net amount left in the hands of the seller after the payment of the expenses like the advertisement cost, legal expenses, brokerage expenses. Suppose, say, if I want to sell a property, See, if you want to sell the property, what are all the additional expenditures? See, advertisement cost, legal cost, brokerage expenses, property tax, arrears, action expenses, and everything. So all these expenses will come. So that is why. So usually, I think almost all the banks, including the State Bank of India, Bank of Baroda, and almost all the banks, they want the realizable value of the property. So they are not happy with the market value of the property. What they want is they want the realizable value of the property. See what actually mean by the realizable value of the property. So realizable means so it is a value after deducting the advertisement after the advertisement cost, legal and the brokerage expenses, property tax, and the arrears if any, and the action expenses, etc. By deducting all those expenses, so what actually will be in the end of that bank? So that is called as a realizable value. So that is why usually all the banks in the valuation report, they always insist for the realizable value. One, they will insist for the fair market value, and other one is the force of sale value, and the third one is the realizable value. Even from the point of getting the insurance or like that, they want some insurance value also, and even from point of some even for doing the company valuations, so sometimes they want the book value of the property also. So usually as a valuer, we are very much interested in arriving the realizable value, book value, and also the force of sale value and fair market value. Okay. So what is meant by investment value? It is the value of an asset to the owner or the prospective owner for the individual investment or operational objectives. The benefits of occurring is based on the future event. This is an entity-specific value or entity-specific basis of value. This basis of value reflects the benefits received by the entity from holding the asset. Therefore, does not necessarily involve a hypothetical exchange. Investment value reflects the circumstances and the financial objectives of the entity for which the valuation is being produced. It is often used for measuring the investment performance. Okay. So here I have given one small example. A piece of vacant land adjacent to this existing property. A piece of land, vacant land, adjacent to this existing factory, if purchased by a buyer for future expansion of the valuation for this purpose, include methodology to estimate the value in addition of this piece of land by virtue of proximity to this factory. So this is an example. An investor acquires a stake in a company manufacturing product. In this case, the investor is looking for returns and growth potential from the investments. The valuation methodology includes current capacity, constraint and opportunities in the operation, potential future earnings, growth, expansion prospect, and the risks involved. So these are all related to this investment opportunities. Investment value is a value addition available to the specific buyer. So you understand what is the meaning of this specific buyer, and that is not necessarily available to all the buyers. It is necessary to look at all future potential while arriving the value. So because he is an adjacent factory owner, so you want to expand the business. So in such cases, it is a very beneficial for him. So that is why we call that adjacent owner as a specific buyer. Yes, it is more than the market value. So scenario building risks and opportunities, production, the sales forecast of the specific buyer are the part of the estimating investment value of the asset for the specific buyer under the certain circumstances. Even denial opportunity to the competitor can be the source of the investment value. I hope that all of you understood what is the meaning of the investment value. Sometimes, so usually it will be for a specific buyer. So it may be more than the fair market value. So fair value, it is the estimated price of the transfer of an asset or the liability between the identified, knowledgeable, willing parties that reflect the respective interest of those parties. That means no arm's length transactions. Fair value of the financial accounting is more consistent with the market value. Next, so usually in the MCQ, they are going to ask one question: what is meant by the special value? Special value is an amount that reflects a particular attributes of an asset that are only valued to a special purchaser. See that a special value is only for a special purchaser because of the advantages arising from its ownership that is not available to the other buyers. Special value arises when the asset has attributes that it make it more attractive to a particular buyer than the others. Next, the synergic value. It is an additional element of the value by the combination of the two or more assets or the interest. So that we call it synergic means combination. So subject matter of the valuation. Subject matter of valuation is the interest of a person in the property. Interest in the property means right of a person to derive the benefits by putting the land in the building to a legal and best possible. So that is a potential use. It means to say that the property in its physical form is not to be valued, but the interest of the owner or the rights of the owner of the property is to be valued. So that is the subject matter of the valuation. Okay, now we are coming to the right point. So that means, see, we are not going to value only the land of the building. We are going to value the bundle of rights. We are going to value the bundle of rights. So that is why I call this chapter is a very, very important for the valuers. The valuation of the real estate. So it may be having a few definitions. It may be having a few smaller things. But unless and until you understand these smaller things, you will not be able to understand any of the thing in the real estate valuation. Either cost approach, market approach, or whatever it may be, or including the law and everything, and including the case studies. So that is why, even though this chapter appears to be simple, so don't neglect this chapter. Study the definitions once or twice, and study all the case studies. There is a small case studies and the definitions once or twice. Okay. So remember all the small formulas in your mind. So then you will be able to click the small 1 marks MCQ as well as the 2 marks case studies. Okay. So I think I have covered the one chapter. There is a one topic. I think so. This is the easiest topic. So in this topic, I have covered what is the meaning of the cost, the price, and the value, and the different types of the value, and what is the fundamental meaning of valuation. What is the fundamental meaning of valuation? Okay. So any doubt regarding this one? Topic 1. If you are not having any doubts at all, then I will proceed with the second topic. Can I proceed? Sir, since it is an online program, I don't know whether all the participants are listening my voice or not. Otherwise, because in this age, it is not very easy to sit in front of a computer for about 3 hours or 4 hours. Okay. It is very difficult. See, if it is a physical session, say, I think we will be interacting each other so that you will not get a sleep. But now I don't know whether you are getting a sound sleep or not, whether you are listening to my words or not. So that is why, so be active, and at least for every 30 minutes, whenever I ask some questions, you just unmute and say yes or no. At least I will be happy. Otherwise, my 4.5 hours of the session will be wasted. Okay. So, shall I continue with the second topic, sir?
Yes, sir.
Okay. So, what are the basic elements of the value? And this we call it as a factors of value also. See, not only basic elements, not only the basic element, that we call it as a factors of value. Factors of value. Because only these 4 factors will help you to increase or the decrease the valuation of the property, value of the property. Because all these 4 factors play an important role in arriving the value, in assessing the value. See, what are the 4 factors? The first one is the utility, and the scarcity, and the marketability, and the transferability. See, all these 4 elements are non-technical because you come to the point of this utility. It is an economical factor. Again, the scarcity. It is also related to the economics. Marketability. Again, it is also related to the economics. So you need to understand what is meant by supply curve, what is meant by demand curve, what is meant by supply and demand curve, what is meant by the budget line, and all these things. Because so that is why they have included economics also in your syllabus. Because once you are able to understand what is the utility, what is the effect of utility on the real estate, then only you will be able to assess the correct value for the property. Otherwise, no. You need to understand this scarcity, how to measure this scarcity, how to measure this utility. See, we are all engineers. See, we know how to measure the land, length, breadth, and everything. We know the technical matters. We know the quantity. But all these utilities, scarcity, marketability, transferability, most of them are the qualitative factors. Qualitative factors. How to measure it? How to assess the value? Unless you have the knowledge of the economics, it is very, very difficult to what I mean to say, measure this utility, to measure this scarcity, how to measure this marketability, what are the different types of the market. So, no, it is not possible. And what is this transferability? Transferability is nothing but the law. See how that property can be transferred from one person to the other person, either through the sale deed or through the will or through the inheritance. Huh? That we call it as a transferability. So these unknown, there is these four elements or these four factors plays a very important role in giving the value, in arriving the value of the either the land or the building. Okay, so now let us try to understand what is meant by utility, how to measure it, what is meant by scarcity, how to measure it, what is meant by marketability. Even though it is not in my scope, I will just give you a brief introduction regarding what is utility and how to measure it, what is scarcity and how to measure it. Because so you will be attending the classes on the economics. Then the economics, they will definitely explain. So what is meant by utility, how to measure it, and what is meant by scarcity, how to measure it, and what is meant by marketability. So that is meant by the supply and the demand curve. So how to measure it, and how that utility, scarcity, and marketability can be implemented for the real estate valuation. So that will be explained in the economics class. Okay, transferability. No, don't worry. You are going to study that transferability in the land and building valuation itself. I think in the law real estate, where you will be come across the Transfer of Property Act, RERA Act, different acts are there, and even the Hindu Succession Act, succession by inheritance, will, and everything. So you're going to study something about the transferability. So regarding the transferability, you need not worry, but you just understand this utility, scarcity, marketability in the economic class, and be well versed with these three aspects: how to arrive it, and how to derive it, and how to apply it. Okay. Now, what is meant by the utility? See, utility is it is a kind of a comfort. It is a kind of taste. So usually all persons, each and every person, they will be having a own taste. So that means it may be a type of a comfort, or it may be a comfort, or it may be a type of a desire, or it may be type of enjoyment, or whatever you say. So that we call it as a utility. It is a purely and it varies from person to person. It varies from person to person. For example, in terms of our technical aspects, so utility means, so we may say that good water supply, good sewage, good gas line, and you could put electrical supply, and advanced network. That is, it may be in olden days, it is a telephone, now it is a mobile phone, or the network, or the internet, or whatever it may be. And next, the transportation, it may be for the bus, rail, and a metro rail, and whatever it may be. And if any senior citizens are purchasing some property, means they want some park or amenities nearby just to have a walk and to keep their health very well. So, and your utility cloud computing, so that may be for the internet or the Wi-Fi or whatever it may be. So that we call it as a utility factor, sir. But see, it all these tastes varies from, other than this basic needs like the water supply, sewage, and the electricity. So the other requirements, either the park, gym, swimming pool, and jogging track, and whatever it may be. So that taste differ from person to person. So when such is the case, how to measure it? Where to launch such projects? Where to launch such projects? So that is very important. Suppose if you want to understand this utility factor, I will give one more example. Okay, sorry, I will take a sip of water. I will give some one small example where you can understand this utility very well. For example, say one project is launched in a ITBT area where only the software companies are there. So in that area, I have launched a very big project. So if I have launched a big project, that means each plot costs about 3 crores or 4 crores. Why? So all the persons who are in and around that projects are only the IT people, say, are the software engineers. So they will be getting the, and some salary and everything, and they will be able to invest 3 crores or 4 crores. But when I launched such projects, what actually the amenities or the utility factors I'm going to provide? See, jogging track, gym, swimming pool, park, clubhouse, everything I will provide in that amenities. So based on that amenities, I am going to fix the value of the property as 3 crores because I have provided the number of utilities. Okay, see, this is a one factor. So suppose if I launch the same project in one industrial suburb where only some small scale industries or the medium scale industries are established, if I launch such a project worth about 3 crores per flat, 4 crores per flat, then what happens? So who will buy such flats? So one is the purchasing power of the people who are working in the industry. They are very poor. See, they are very hard people, hard working people. So that means the labor class or above the labor class or whatever it may be. And the purchasing power is very less. And beside of that, morning till evening, they will be doing some hard work in the factory. Okay. See, in the evening, what they want is they want a place where actually they will get a sound sleep. Okay. In the morning, they will get up and they will go to the factory itself because they are all very hard workers. And there is no necessity of the jogging track or swimming pool or the walking footpath or the gym or clubhouse, because see, from the morning till evening, they will be doing some physical work. See, if such projects are launched there, nobody will purchase. Okay, what actually they want? They want a 2 BHK or 1 BHK house where actually they will get a shelter from the rain or the sun so that they can have a sound sleep. They don't want any say clubhouse or the gymnasium or the sports club or whatever it may be. Okay, see, that is called the utility factor. So utility factors may be in the different forums. It may be in the different forums. Okay, so it is a purely an economical factor, and we don't know what actually in the minds of the people and what actually their wishes and what type of property they want to purchase, so that we don't know. So because the taste of each and every person differs. Okay, so that we call it as a utility factor. So utility is always measured in the terms of the indifference curve, I think. So in the economics class, they have explained this indifference curve in detail, because based on the taste, so you can draw the number of indifference curve line. So this is the measure. This is the tool for the measure of this utility factor, and you can draw a budget line also. I think what is meant by budget line, indifference curve, and everything they have explained in the economics class. I don't want to go in a detail. So just I am giving an hint. So that indifference curve is one of the tool to measure this utility. Based on this economic factor, you can arrive or derive and apply this factor to the your valuation. Okay. So now I will come to the point of the utility definition. I hope that all of you are understood by just seeing the slides. Okay. Value arises mainly out of utility or usefulness in view of existing and anticipating benefits by virtue of the possession and use. Now, I think the definition is clear. Value is highly subjective and abstract in nature, and value comes into practice and reality only when the transaction takes place in the market and becomes exchanging value. Okay. Now, what is a scarcity? So this is a very, very important factor, and usually more. So at least minimum 1 or 2 questions will be on this scarcity, because what is meant by scarcity? See, usually we are dealing with the land and the building. Am I right? Land and the building. So what about the land? I will come to the point of land only. I think I have got one slide. Okay, just to see this slide. So don't worry, sir. I think this text is not clear. So don't worry about that text. You just see this piece of land. Land scarcity and high cost. Land scarcity and high cost. The land is limited. Land is limited. Because, for example, India. So India means, so it is having some hectares or some square kilometers of area. Am I right? So that is always fixed. It is fixed for the country, it is fixed for the village, it is fixed for the town, it is fixed for the entire world. Okay. Then, but what about the population? The population goes on increasing. What is the population in 2001? What is the population in 2005, 20, next 15? Now it is at 20. What about the 25? And what about the 2030? The population of any city or the town or the village or the entire world goes on increasing day by day. But what about the land? Land is an inelastic material. See, with respect to the land, I am giving the more different characteristics of the land. Okay, so your MCQ will be on the different characteristics of the land. What are the different characteristics of the land? It is a scarce material. It is an inelastic material because it is inelastic in nature. It is not possible to expand with respect to the population. It is only limited and it is non-destructible. It is a non-destructible. Okay, land is non-destructible and it is a scarce material. It is inelastic material and it is a and it is only limited in value, limited in area. Okay, so that is why usually in all the cities, I think you are from the different towns. I don't know from which cities you are. At least you tell your cities and the name. Cities from where you are attending this MEP program, the Lucknow or different.
Delhi.
Delhi, very good. Next one, sir.
Chennai.
So all of you are from Delhi.
I am from Chennai.
Okay, very good. Okay, you take the case of the metropolitan cities like Bangalore, Chennai, or the Delhi. Now, what happens to the land in the CMD areas? The center is in the CBD area, that is central business district areas. The land value goes on increasing. In the 2001, see, it is at 10,000. Now, in the 2010, it is 20,000. Next, in 2020, it is 30,000. Now, it is a 40,000. Why? Land value goes on increasing, because land is a scarce material and its area is limited and it is a non-destructible. It is non-destructible. Okay. And it is inelastic in nature. Okay. So, scarcity. So, that is why land, we call it as a scarce material. So, that is why usually in all metropolitan cities, vertical growth is allowed. Vertical growth. They are going to construct 20 floors. 22 floors, 25 floors. Why vertical development? Because land is a scarce material. Land is not available. Land is not available. So that is why they are promoting the vertical growth. Okay, so the demand again depends on the whether it is a land or the building. See, when we compare this demand for this land, so usually day by day, everybody wants to buy a site. Everybody wants to purchase a piece of land, because so they will treat that as a very good investment opportunity. See, piece of a land. See, even in the major cities, even in the villages, they are investing on the agricultural land, whatever it may be. See, the people are very much interested in purchasing the piece of land. Why? So that is why the demand goes on increasing. Population is also increasing, demand is also increasing, and the purchasing power of the people is also increasing. So the demand for the land is increasing. So that is why the rate for the land goes on increasing and it will never decrease. Okay, but in case of the building, it is not like that. If it's a newly launched, so it may fetch the very good value, and it depends on the different factors. And after some years, and it may be for some depreciation will take place. Otherwise, after 20 years or the 30 years, it may become the obsolescent. Other than the depreciation, you may have to deduct for the functional obsolescence and also the economical obsolescence. And there are a number of factors will be there associated with the building. But whereas for the land, it is not like that. So the scarcity plays a very important role either in assessing the value of the land or the building. So this is again to measure this scarcity. scarcity. You need to understand this economics very well. That means what this is a supply curve. I have written this is a supply curve, and this is a demand curve. Say D naught. So this is a demand curve, and this is a supply curve. So this is a S naught, S1. So these two are the supply curves, and this is a demand curve. I have written. Okay. I think in the economics classes they have explained in detail how to write that demand curve, how to write that supply curve, and how to apply this demand and the supply curve in the real estate economics. Okay. So I am just giving you a brief introduction because since it is a scarce material, since it is a utility factor, how to measure it? You should have the concept. Unless you have the concept of the economics or the elements of value, it is very difficult for you to assess the correct value of the property. Okay. So what is the vacancy rate? Now, after assessing this scarcity and everything, you need to measure the vacancy ratio, and also the occupancy ratio. Now, for the land, I have given the some diagrams. So how to write the demand and supply curve and assess the value. But what about the flat? How to arrive it? See, this is one of the technical and the basic tool to arrive the vacancy rate and also the absorption rate. So what is the vacancy rate? Vacancy rate is the period for which the number of real estate properties remain vacant. For example, if there are 400 flats are there in a tower, see out of these 400 towers, how many of them are vacant in 1 year? How many of them are vacant in the next year? See, that means how many of them are sold in the market this year? How many of them are sold in the next year? How many of them are sold in the third year? Okay. Otherwise, see, if they are all the flats are sold in 1 year, say then the occupancy rate will be more, vacancy rate will be less. Suppose if the all 400 flats are sold in the about in a long run of about 4 years or 5 years, then we can say that the vacancy rate is more because number of flats will be vacant in the first year, number of flats will be vacant in the second year, number of flats will be there in the vacant in the third year or like that. So vacancy ratio and also the absorption ratio, otherwise the occupancy ratio, plays an important role in arriving the or deriving this scarcity. Okay, I hope that all of you understand. Given this vacancy rate and also the absorption rate also leads to arrive the marketability of the property. Marketability. If all the flats are sold in well within the 1 year, then we can say that the marketability is good. Okay. So occupancy ratio, again, it is a definition. So I think as an engineer, not necessary to explain much regarding this occupancy ratio and also this vacancy ratio, because so in the income approach method, so they are going to explain everything regarding the occupancy ratio and also the vacancy ratio and how to apply that in the income approach to arrive the valuation of the property by income approach method. So they will explain in detail. Okay. So since it is a basic valuation of the real estate, and this is the first chapter in the real estate, I'm going to give the only the hints and also the fundamentals regarding this valuation of the real estate. So what is the marketability? Marketability depends upon the demand and supply and also the date of transaction, place, time, etc. So I think even in the economics class, you have studied much more about the different types of the market. What is meant by buyer's market, what is meant by seller's market, and what is meant by the open market, what is meant by closed market, what is monopoly, what is oligopoly, and what is, see, all these things I think you have studied in the economics class. What is meant by buyer's market, seller's market. Other than this, you need to understand what is meant by open market, closed market. I think all of you know all these things. Different types of market conditions in economics. The same thing can be applied for the real estate also. Sir, you can unmute and you can answer, sir, so that I will be happy, so that all of them are listening these things.
Yes, sir.
Different types of market.
Yes, sir.
Monopoly, oligopoly. and open market, closed market. See, I can give some few examples for this open market or the closed market. In open market means, see, if any project or if any flats are launched, anybody can enter or anybody can purchase a property. But so usually in the some closed markets will be there. For example, Parsi colony in Mumbai, otherwise a Jains colony in Bangalore. I don't know, some other colony or some other layout may be there in the Chennai or the Delhi. So usually what they will happen is, so they will sell the property and they will buy the property, and from only the buying and the selling will be from that community only. Because see, in that Jain community, I just went and I asked, sir, I want to purchase a site in this. No, sir. Sir, this is only for the Jain community, and that too for purely a vegetarian, sir. So if you are a non-vegetarian, we will not give you a site. So that we can say that it is a closed market. Even in the Parsi colony in the Mumbai, I think. So if anybody is from the Mumbai, I think they may be knowing. See, they will buy and sell the property only to the Parsis, not to the any other externals. So that we call it as a closed market. So like in that way, so you need to understand, you need to apply that economics into the real estate economics. Okay, so it is not necessarily economics means it doesn't mean that if what is meant by the retail market, or what is meant by the open market and selling some retail goods, soaps, shampoo, or like that. No, it is not related to us. See, we are always interested in the real estate economics. So you need to understand these things, things like this. See, what is meant by closed market? What is meant by the closed market and the open market? See, in the open market, what happens is anybody can enter into the open market, and the free exit and free entry will be there. So they can enter freely and they can exit freely in the open market. But in certain situations, it will be not like that. Okay, that we call it as a closed market. Okay, so in the same type, you have to apply such different types of market to the real estate. So that means to say that the marketability also plays an important role, and it is also an important element in arriving or deriving the value for an asset, either it may be a land or for the building. Okay, so this is a monopoly. Perfect. What is a perfect competition when many suppliers and the buyers and monopoly? So this is all related to the economics. Okay, so the fourth element is the transferability. So if the asset of the property is having a legal rights with a legal benefit of use, then we call it as a transferable. So don't worry about this transferability, because real estate law is there. So in that real estate law, you are going to study the what is meant by will, what is meant by sale, what is meant by the gift deed, and everything you will study there. What are the different acts or the different real estate laws, like the Land Acquisition Act, RERA, how they will play an important role in assessing the value of flats and etc. So if there are no rights, means no value. So that is why with the valuations, since we are doing the real property valuation, we need to assess the value of the land, and we need to assess the land value and the building value with the bundle of rights. Okay. So any doubt regarding this one? So elements of value, definitely you will get one question, and different types of value you will get one question. So 2 marks. See, if you come across any wonderful question, one wonderful MCQ, where you are not able to understand or where you are unable to get the answer, so don't forget to share your MCQ or the case study to my WhatsApp number. Otherwise, you can also contact through the WRVF, so that I will be available on the WhatsApp, and I will be able to give the correct answer to my best of my knowledge. So I am again and again repeating this. So see, you're all professionals. So if I just give a little hints regarding this one, so you will definitely pass the examination in the first attempt itself. What I want is, I want all of you to pass the examination in the first attempt itself. So that is my about, I think, so I think I have trained about 300 to 400 IBB aspirants, out of which about 90%, 95%, all of them have passed the examination in the first attempt. Okay, so no doubt at all. So can I proceed to the third topic?
Yes, sir.
So factors affecting the value. So, those four elements we call it as a elements of value or the factors of value. So these are the factors affecting the market value. So one is the physical, technical, economic aspects. So another one is the legal aspects, social aspects. Okay. So this theory itself is explanatory. So you just go through this one. Physical and the technical means the shape and the size of the plat, road frontage, soil condition of the land, type of construction, specification of the building, planning and architectural features of the building, zoning rules, regulations, maps, coverage, width, FSI, height factors, etc. Okay. Even FAR and FSI plays an important role. FAR and FSI. So is there any difference between the FAR and FSI? Sir, what is the difference between the FAR and FSI? So anybody who knows what
One
is
is
the difference?
related to ground coverage and another is related to the ratio between entire building area and the plot area.
Sir?
One is related to the ground coverage
Uh,
and another is related to the entire area of the building and plot area.
yes, sir. See, FSI means it is only an index. FSI, floor space index. See, usually this is specified by the authority. See, most of the valuers, they are always under the confusion that FSI and FAR are one and the same. No, FSI is different, FAR is different. So it appears to be one and the same, but it is not like that. FSI means floor space index. See, index means it is 1.5, 1.75 and 2.5. See, that may be for a particular town or a city and that will be fixed by the authority. Am I right? What actually
Absolutely,
meant by
sir.
the FAR, floor area ratio? So that depends upon depends upon the actual construction. See, you might have constructed about 3 floors or the 4 floors. See, based on that, you are going to arrive the floor area ratio. So that is the derived value. Whereas, see, this value is FSI is fixed by the authority or the local planning authority. So economic factors, demand and supply of the real estate, paying capacity of the residents, paying capacity or the purchasing power, and the employment opportunities and availability of the finance from the bank. So these are all the economic aspects. Developments, recession, interest rate, inflation, say LIG, MIG, HIG. So LIG means lower income group, middle income group, and also high income group. So these are the classification with respect to the economic aspects. And legal aspects, Rent Control Act, laws governing the land use and the land ownership and development rights, development regulations, and also TDR, there is a transfer of development rights, and also freehold property or the leasehold property, and encumbrances if any, and the tax dues if any pending, or litigations or whatever it may be. So these are all the legal aspects. See, what are the social aspects?
Sir,
Yes, sir.
sir, as you have explained the FSI and FAR, FSI is fixed. That is, if a plot is having area of 1,000 square feet and FSI is fixed, say 1.5, that means uh, one can construct 1,500 square feet over that plot.
Okay.
Am I right, sir?
Sir, yes, sir. See, FSI is
And
usually
and second thing is that if someone has constructed say 2,000 square feet or 1,800 square feet, then FAR will be 1.8.
yeah.
Is it so, sir?
Yes, sir. Yes, sir. See, FAR usually it varies from building to building. FSI is a constant for a city, and that is prescribed by the authority.
Okay, sir. Got it.
All of you got it? See, FSI, floor space index, it may be 1.5. See, that is prescribed by the local body or the authority or the government. Whereas FAR is the actual. So next, the fourth topic is highest and best use, value in use and value in exchange. So I'm just covering the entire syllabus based on the syllabus only, and based on your syllabus only, they are going to ask the questions. Okay. So usually highest and best use is one of the principle adopted in the valuation process. So there are about 12 or 15, I think, 15 principles. So can you name any one or two principles of valuations? Any principles of valuations? Sir, nobody knows what are the principles of valuation. At least have you heard the name principle of conformity, principle of substitution, principle of integration and disintegration, and a principle of progression, principle of change, principle of balance, principle of anticipation? No? Sir, if you are a valuer means you must understand what are the principles that are necessary to derive the value of the property. See, the first one is the principle of substitution, principle of conformity, principle of integration and disintegration, and principle of conformity, and also anticipation, and principle of highest and best use. So this is one of the principle and most widely and commonly used principle in valuation. Out of all the 12 principles, so this is the commonly used principles in valuation. So if you are interested to just go through all these definitions, unless and until you understand the principle of change, principle of conformity, principle of anticipation. So because most of the questions will be on the principles of the valuation. Okay, I think so they may be covering all these principles in income approach method and also the market approach, otherwise the cost approach method, because the cost approach method they will use the method of substitution, and they will apply the different procedures, and if they will apply the different principles to derive the value. Okay, so here I'm going to explain one of the best and fundamental principle, that is highest and best use. Suppose if there is a land or a building, so what actually we will consider to give the value means highest and best use. The concept of highest and best use is the fundamental to the real estate valuation. In one application of concept, a site is valued though vacant and available for its highest and best use. In another application, the highest and best use of the property is estimated as improved. Thus, a site may have the one highest and best use in vacant condition. For example, if an old building is there, suppose if that old building is demolished and a new complex or a new building is constructed, then I am going to get so much of rent. So that is a principle of anticipation. So that is a principle of highest and best use. For example, if a property is located in a mixed zone, I may construct a commercial building or a residential building. Suppose if I construct the residential building, how much rent I am going to get? Suppose if I construct the commercial building, how much rent I am going to get? Then I will select the right one. So that is the highest and best use. Okay. So it may be for the land or it may be for the improvement. Improvement means addition of the building. It may be for the land or it may be for the building. Always, before arriving the value, we need to assess what is the highest and best use that can be made with the property, whether it is for the land or the building. The highest and best use means which is legally permissible. Legally permissible means I cannot construct a residential building in an industrial zone. I cannot construct a commercial building in a residential zone. So that is and legally permissible. See, that means with the relevant FAR. See, even though there is a much demand for the rental houses in that area, I cannot construct 2 floors, 3 floors, or 5 floors. Because see, legally it should be permissible. Why? See, their legal local bylaws will be there. The FAR maybe 1.5 or the 2 or the 2.5. So within that only you have to construct a building. So legally permissible means it may be statutory, it may be from the revenue authority, it may be from the local authority. So it includes everything. It includes everything, including from the approved plan and everything. So next, physically possible. Physically possible. Suppose if the width of the road is only about 20 feet or the less than 20 feet, I cannot construct a multi-story building there. So physical possibility should be there. Okay. Next, financially feasible. Financially, if I make an investment of 10 crores, if I get only about say 10,000 rupees per month as the rent, otherwise only 1 lakh rupees per annum as the rent, then what is the use? So any project, if we implement, it should be financially feasible, maximally productive. So that is the concept of the above, highest and best use, or in brief, we can say above. See, legally permissible, physically possible, financially feasible, and maximally productive. So if you take all these points into consideration, then we can arrive the value of the property based on the highest and best use. So this is the one of the fundamental and the best principle used in the value. So these are all the common asked multiple choice question. You just go through the definitions of these. There is a value in exchange and a value in use. Value in use. So the term refers to the value of the individual asset, which is a component of the going concern. It is estimated amount that reflects the specific contribution of a particular asset to the going concern entirely. Value in use can include elements of personality, plant, machinery, equipment, etc. And also it encompasses the concept of the deprival of the use, etc. So that we call it as a value in use. And what is value in exchange? It is the amount of goods and services which may obtain in the market in exchange of a particular thing. In other words, it is the price of a particular good which can be sold and brought to the market. So just to go through these two definitions, because in the examination, in the MCQ will depend on the highest and best use, otherwise on the value of the exchange and the value in use. So that is regarding with respect to the highest and best use. Now the fifth topic is the real property. Real property, rights and interests in the real estate, types of ownership, and types of occupancy in the real estate. So we are going to discuss these three aspects. So real property, rights and interests in the real property, types of ownership, and types of occupancy in real estate. Now, what actually meant by the real estate? So don't confuse with the real property and also the real estate. Real estate is different. Real property is different. Real estate is different. Real property is different. What is meant by the real estate? See, here having land and building. Building attached with the land. And commercial building attached with the land. Industrial building attached with the land. And the vacant land. So all these we call it as the real estate. Real estate means, see, it is a tangible asset. Real estate means it is only a tangible asset. We can touch, we can feel, we can physically verify it. Okay, so that we call it as a real estate. Next, what do you mean by the real property? See, here there is a land. Land includes trees and bushes. trees and bushes, and also the boulders. So that is the land. Okay. Next, real estate. So real estate also includes land as well as the houses, garages, fences. So that means real estate is also equal to land plus improvement. Land plus improvement. Then what about the real property? Real property means, see, it is a land as well as the improvements made on the land, that is a building, land plus building, plus the bundle of rights, plus the bundle of rights. So that we call it as a real property. I hope that all of you understand. Because so in the examination, definitely you will get the one question from this real property and also the real estate property. So they will just confuse you with regarding the bundle of rights or whatever it may be. If you are having a clarity in your mind with respect to the what actually meant by the real estate and what actually meant by the real property, you will not get any confusion at all, and very easily, as soon as you read the question, you will just click the right answer. So real estate means it is a tangible asset, it is a physical asset, and any land and building, otherwise building attached with the land, so that we call it as a real estate. Whereas with this physical or the tangible asset, if the bundle of rights, if it is associated with a bundle of rights, like the right of possession, right to dispose, right to use, right to encumber, right to outlet of enjoyment, then in such cases, if they are having such all bundle of rights with the property, that property we call it as a real property. I hope that all of you got it. See, otherwise you will be losing one MCQ. So this is one of the easiest chapter. I think this is the 5th chapter. Easiest MCQ. So what is a real property? Now I come to the point. Okay. Real, see, usually most of the values. So in the examination, they are clicking the wrong answer. 50% of them are clicking the wrong answer. Why? Why? Even though I am showing so many slides, I am explaining and again. What about the skyride? See, real property includes real property includes skyrides. So suppose if in the MCQ, in one ABCD answer, if skyrides is there, so usually skyrides. See, we are talking about only the real property. Say, why they have got skyrides? How we will get the skyrides? So see, it may be a wrong answer. So like that they will think no. Real property includes skyrides also. Sometimes what they will do, they will leave this skyrides. They will write air rights. See, that is also included in the real property. I hope that all of you are got it. Sir, at least you say yes or no, sir.
Yes, sir.
Oh.
Yes, sir.
Yes, sir. If I'm so that I will be happy and I will get some more energy to continue for another 2 hours. Okay. So,
Sir, one question.
sir,
Sir, flat is a real property or not?
sir,
Flat.
flat.
Is real property or not?
See, any tangible asset associated with a bundle of rights. If they are having the sale deed and everything legally right, permissible, and if they are having the ownership of the property, then the flat is a real property. See, any physical asset, any tangible asset associated with the bundle of rights. Again and I am repeating, bundle of rights. If the flat is having a no sale deed or nothing, no record, nothing, and then what happens? It is a real estate property. Am I right, sir?
Okay.
Yes. Next. So easement.
Sir,
Yes.
can we say that interest in the real estate property is a real property?
Sir, tangible asset. See, this is what actually you're going to confuse in the examination. See, any tangible asset associated with a bundle of rights, it should be plus. It should be plus. Tangible asset plus. See, okay. I will give one example. I am going to give register one property. See, there is no physical existence of that property. There is no physical existence. I will simply prepare a one sale deed and do it in favor of my friend or some other things by mentioning some consideration about 10 lakhs or 20 lakhs. There is no physical asset at all. It is only just a transfer. I will give you, say, you take this sale deed. Or for example, you just assume that I am giving a check. So there is no money in the bank. There's no money in the bank. Otherwise, I will give you a sale deed, but there is no physical existence of the property. Then what happens? With that sale deed, what you are going to do? See, real property means it is a physical asset. It is a tangible asset. It is a tangible asset associated with a bundle of rights. That we call it as a real property. If there is no bundle of rights means, then we call it as a real estate property. I think all of you got it.
Got it, sir.
Yes, sir.
Next.
The same thing what I understood is that there is a real estate and the interest what anybody has in that real estate is a real property.
Yes, sir. It is a bundle of rights. It may be a leasehold property, rental property, or the sale deed, anything. So, see, some right should be there. Some
Yes,
bundle
sir.
of rights should be
Thank you.
there. Some interest should be there. Then only we
Okay,
call it as
sir.
a real property. Okay, real property includes sky rights. Suppose if in the examination, if they give air rights means, said don't confuse. Sir has told sky rights, but here they have given the air right. See, they are all one and the same. So sky rights. Real property includes sky rights, water rights. So you can dig a borewell in your flat or in your site or in your agricultural land. You are having that water rights. Even you are having a mineral rights also, some minerals, etc. Other than some exceptional minerals. So you will be having the rights over the granite or some copper, iron ore, or whatever it may be. Okay. So you are having some rights over the water, right over the mineral. So that means to say that otherwise, instead of this water rights, what they will give is earth. Earth. See, earth is also associated with the real property. Earth, sky. So don't confuse yourself. Even if they mention sky, it is good. Even if they mention earth, it is also good. Yes, sir.
Sir, if I am having a large piece of land and I find some minerals or oil in that field, so will that be my property or it will be government property?
Yes, sir. See, other than some minerals prescribed in the law, see, they have mentioned some special minerals. For example, radioactive elements and some other minerals are there, and including some, I think, see, there are some special minerals they have mentioned. Other than that, see, everything belongs to the owner itself.
I heard that if I have some borewell in my property, and in some cases of scarcity, government can acquire that boring for the supply of water.
Sir, see, in case of, sir, actually you are having the full rights over the property, right over that water. But the thing is, in case of the emergency, so particularly in case of the metropolitan cities like the Bangalore and also the Chennai, what happens is, see, when there is a scarcity of the water, what actually the people will do is, see, the persons who are having the borewell and all these things, they will do some commercial activities. See, instead of for one tank of water, they may sell it for about 1,000 rupees or 2,000 rupees. How the poor can buy it? It is a fundamental thing, you know. So in such cases, only the government will form a rule. So usually, when for example, in case of some corona period or during the summer, even in Bangalore also, it happens because see, any persons who are having the borewell, they have to supply water to the government tankers are like that. But usually water right is associated with the real property as per the law.
Sir. Thank you.
Okay, sir. Next, so now we have understood what is meant by the real estate property and what is the real property. Now we will go for the another thing. So that is what is meant by the personal property. But see, jewelry is a personal property. Vehicle is a personal property. Any commodity or any assets you are having in your house is a personal property. Cloth is a personal property. So now I think you yourself can give a number of examples. Cash is a personal property. Okay, so don't confuse yourself. And personal property may be tangible or may be intangible. So I think you should have a clarification in your mind. Say a real property, it is only a tangible is associated with a bundle of rights, whereas a personal property may be tangible or intangible. Okay, so jewelry, cash is a real property, vehicle is a personal property, even the vanity bag this lady is having, so that is a personal property. Otherwise, the jewelry, cash, bank account, a fixed deposit. So all these things are personal property. So usually the MCQ, they may give some examples to classify this personal property or to identify the personal property or to identify the real property or the real estate property. If you are having a clarity in your mind with respect to the all these definitions, you will not get any confusion at all. Okay. So what type of property are the following? So this is a question for you. Intangible assets. What is the goodwill, patents, copyrights, franchises, customer data, software, trademark, brand. So what type of property all these are? So you can unmute and answer, sir. So this is only a MEP program. This is a mandatory educational program. Educational program means, so in this 50 hours, so the RVO has to guide you or treat you or to educate you in such a way that you will pass the examination. So that is why we should have an interaction. So it is not necessarily just so you have gotten the classes. No, it's not like that. We will have an interaction. You just learn from here itself. Learn here itself. Okay. So what type of properties are these following?
Intangible assets.
Intangible assets that is there in the see whether it is a personal property or a real property. Whether it is a personal property or a real property.
Personal property.
Personal property.
Yes, it is
Not a real property.
All these are personal property. Even the bank account is a personal property. Cash is a personal property. Fixed deposits, personal property. Next, debentures, shares, mutual fund. So all these are personal property. So have clarity in your mind. Next, so you can come to one conclusion. So personal property may be tangible or intangible. Are you accept? Personal property may be tangible or intangible. Correct?
Yes.
Yes, sir. See, I'm just sharing this slide. You just see it. So these intangible assets are also personal property. Whereas the jewelry, cash, they are also personal property. So personal property may be tangible or intangible. So if you are having clarity in your mind regarding all these things, so you can answer any of the multiple choice questions. You can answer any of the multiple choice. Now, there's one more confusion. I don't know how many of you know this one or not. See, fixtures and chattels. I think you just read the slide. You just go to the definition.
Belonging to the owner of the real estate fixtures are usually owned and installed by a tenant for a tenant's use. Fixtures are permanent part of building. Trade fixtures are removable. Fixtures are real
See?
property included in any well or
So all of you have read this one.
right fixtures are
Huh?
personal property
So
included only
fixtures belong to the owner of the real estate. Fixtures. See, anything fixed to the building. Okay. See, otherwise, if a tenant has fixed something to the building, if the tenant has a fixed, for example, it may be a carpet, or it may be a AC, there is a air conditioner. Otherwise, it may be a washing machine. See, if the tenant has brought those things and he has fixed in the tenanted house, so then we call it as a trade fixture. Then we call them as a trade fixture, because see, once the rent once the tenant is vacant the property, so he will remove all those things and he will take away. It's the air conditioner and also the washing machine and otherwise the carpet which is provided in the hall and everything he will take. Okay, so that we call it as the trade fixture. So anything which belongs to the tenant, we call it as a trade fixture. Otherwise, any fixture which is attached to the building, so that will go with the owner, and they will, once they sell it, so it will go with the property. So trade fixtures are also personal property. Trade fixture also carpet, washing machine, and also the air conditioner. Okay, trade name board, see, or whatever it may be. So, and even the furnitures. Suppose if the owner has equipped the furnitures, so it will be only a fixtures. If the tenant has equipped the entire premises with the furnitures, so that furnitures we call it as a trade fixtures. Okay, even the furnitures are also personal property. Washing machine, personal property, and also the carpet, personal property, air conditioner, personal property. If these personal properties are with the tenants, then we call it as a trade fixture. If these personal assets are associated with the owner, they will go with the property. They will go with the property. They will be attached with the real properties. Okay. See, if an air conditioner is attached to fixed by the owner, whenever usually the building owner sells the property, so usually they will not remove the air conditioner or like that. So they will go with the property itself. Okay. So that is the difference between the trade fixtures and also the other fixtures. Now, what about the chartless? So regarding so usually, so just to confuse you, other than confuse you with respect to the MCQ, other than the real property, real estate, and the personal property, they will ask a very silly question. So small question. That is what is meant by the chartless. See, furnitures are nothing but the chartless. See, that means, see, anything, any personal property which can be easily removable from the building, which can be easily removable, which is not attached permanently to the walls or the floors, so that we call it as a chartless. So very easiest. I think the figure itself is more explanatory, I think, rather than going for the definition. Am I right? Huh? See, built-in fireplace. Built-in fireplace. See, this is a built-in fireplace where, so here the fire is there, so that where all of they can sit here and they can enjoy the party or whatever it may be. So, built-in fireplace, so it is a fixture because it is permanently constructed in the building and it is attached to the building. Okay, freestanding lamp, so it is a chartle. It is a chartle because it can be very easily detached from the building. Even the furniture is a chartle. Even the carpet is a chartle. Say a rug or a chartle, so it is a carpet. So it is a chartle.
Sir,
Sir.
what would we call fixed type of furniture? Fixed furniture, just as sofa, there are some.
Yeah, for
Which,
for example, there was the fully furnished flats in the Bangalore. Fully furnished flats. Fully furnished flats means the, for example, cot, air conditioner, and everything. So they will be attached to the walls and the floors. Even the cot. Okay, see, that will not be a separate part of the furniture, and they will be fixed. See, they are equipped permanently, fully furnished. Suppose if the cot is
the furnishing may be fixed type or detachable type, sir.
yes, sir. See, if it is fixed permanently to the building, that is a that we call it as a fixtures. It is a detachable. We call it as a chottle.
Got it, sir.
So usually your MCQ will be very tricky, and also on the small examples.
Here
And
we can say that furniture may be fixed and may be chattel, both.
yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, sir. And the furniture may be a sorry. See, furniture may be a fixture or it may be a trade fixture. Trade fixture means if it belongs to the tenant, it will become a trade fixture. If it belongs to the owner, so it will be only a fixture. Got it?
Yes, sir.
So very small definitions and small difference between this terminology. Very small. Say rather than the definition, we can say that only the terminology. See, only 4 terminologies we have discussed. Only personal property, real estate property, charters, and fixtures. See, just 5 things, and the 2 only words. That's all. But if you are unable to understand the meaning of those words, so it is you will get confusion, and then you will click the wrong answer. I hope that those who are attending my classes, so you will not click any wrong answers. So out of 9 questions, you should get a 9 out of 9. Okay.
Yes, sir.
So any doubts, sir? Can I continue with the 6th chapter, an interesting chapter?
Yes, sir.
Now, there is a only theory is there. That is a real property and real estate. See, if you want, I can share the slides with the WRVF, so you can collect from them. Otherwise,
Sir,
not
sure.
necessary. I think.
Sir, if you will share,
Yes,
it
sir.
will be beneficial.
I think they have provided the beautiful material. I think this study material also they have provided that. So in
Yeah, they
that
have
study
provided
material, that
Sir, these will be concise. The study material is so long. These
okay,
will
no
be
problem, no
concise.
problem. I share with the WRVF. I will tell to Akshita madam to share this these things. But rather than sharing and all this, the PPT, I think so you don't have the. I know very well. Even after sharing the PPT, you will be having no time to open the PPT also. Most of the time, it happens like that. You will collect the PPT and that will be in the folder itself. So that is
So
why.
how we will get pass, sir, in the examination until unless we study either the course or other PPT or both.
No, see, that is why in this MEP class itself, I am making you all everything clear. Everything is clear. Am I right? I'm not just delivering the very tricky and tough definitions. I'm going with the simple definitions of the real estate, so that even a common man can understand the terminology.
Yes, sir. Yes, sir. You are explaining in a very simple manner, sir.
Yes.
Thank you for
Okay,
that.
okay. Don't worry. I will share this also. So in future also, see, suppose if you come across any question, any MCQ or the case study, so don't forget to share that questions MCQ and also the case studies to me, so that I'll be able to provide the right answer to my best of my knowledge. Okay. Now, real property rights and interest. Now we know what are the rights and the interest in the real estate. So that means that there are bundle of rights will be there in the real property. See, what are those bundles? What are those bundles? So in the Transfer of the Property Act, so there will be a detailed explanation of the how they will get the property through the will or through the inheritance or through the sale or through the gift deed, and what is a gift deed and everything they will explain. So don't worry. And because you're also having the Transfer of Property Act 1968, 1986 or like that. I don't know what is that year. So what are the types of the rights? Right of possession. In exclusion of the old word, owner has the right to possess the property which he owns, because if he is the owner of the property, he can enjoy that property. Law protects his right of ownership or the possession. So that we call it as a right of possession, right of enjoyment. So usually whenever we are valuing a property, we will ask for certain documents, because we are doing the real property valuation. We will be asking the bank or the owner, so where is the sale deed? Where is the lawyer opinion? Where is the approved plan? And how you got that property? Whether through the will, whether through the sale deed, whether through the action, whether through the gift deed. See, as an engineer, why you want all those things? Because so you have to verify the right of possession, whether he himself is staying in the property or some other tenant is staying in the property, whether he is the absolute owner of the property, whether he is only the tenant of the property. How we got that one? Because we are valuing the real property. We are valuing the real property. Okay, so that is why we are going to ask the number of documents from the owner. We will collect the documents. Then only after collecting the documents, we will peruse the documents, and then we are giving the opinion. Try to use and enjoy the property, because they are going to mortgage the property against the loan. They are going to mortgage the property to the bank. They are transferring the part of rights. They are transferring the rights to the bank. Okay, so they are mortgaging the property. Suppose if they are mortgaging the property and they are giving the loan, means banks are taking the valuation report for the secured lending. Secured lending. Their amount should be secured. How the amount will be secured? The property, either only the owner will be enjoying the property. Either the tenant will be enjoying the property, because the bank will not go there and bank will not occupy unless and until it becomes NPA. They will not occupy. Only the owner will be enjoying the property. Only tenant will be enjoying the property. Only owner will be collecting the rent and everything. But in the mortgage, what happens? They are transferring certain rights to the bank. In case of defaulter, they can sell the property through the action. They can sell the property through the action. See how? By transferring certain rights, they are mortgaging the property. See, with that much of rights, they are going to sell the property. Suppose if it becomes NPA. Okay, so that is the use of this bundle of rights. Okay, next, right to lease, rent, sale, transfer, or assign, gift, or give under will. See, we can do anything with that property. We can lease that property, we can rent that property, we can sell that property, we can transfer that property, or we can assign, we can gift, and give under will. So these are all the rights. So that is why we need to understand what are all the rights we have before valuing such properties. Before valuing. So right to lease, rent. Owner enjoys all these rights till perpetuity, as ownership right is perpetual. Owner can transfer part or whole of this right to the other for a determined period, as is the case in the lease and the license. Ownership continues to remain with the owner even after the enjoyment right is transferred to the lessee or the license. Next, right to use, right to enjoy, right to consume, right to alienate or destroy the property. Land can be alienated and the building could be destroyed or rebuilt. So these are all the rights of the owner, rights of the owner. Right to lease, rent, sale, transfer, assign, gift under any will. So next one is the right to develop. So you can construct a multi-story building or a commercial complex or an industrial shed or a garden or whatever it may be. Next, heritable right. Owner can give away his ownership right to his successor or beneficiary under will. So that we call it as a heritable right. Next, a residuary right. The owner of the property holds a residuary powers in case of the lease, license, or mortgage. Residuary rights are permanently held by the owner unless the same are sold or gifted. All these rights are popularly known as a bundle of rights. Absolute ownership of the real estate means that the owner hold each and every right described above. I have described about 7 rights. Okay, he can rent, lease, create life interest. He can also permit development on the land plat by the third party as per some norms and conditions by giving a power of attorney. So these are all the rights that the owner may have. Okay. Thus, the valuation of the real estate does not mean valuation of the actual physical form of the land and the buildings, but the valuation of the rights of the owner of the land and building. Valuation of the real estate therefore requires a proper assessment of the value of the owner rights in the tangible property. These rights could be in the form of intangible property like the life interest in the real estate. Valuer should examine the rights of the owner and value these rights on relevant data valuation. Several different types of factors which are innumerable in numbers are broadly classified into the following 4 groups. So one is a physical and technical factor, economic factor, and the legal factors, and social factors. So what are the physical and the technical factors? Land character, so the shape and the size of the plat, road frontage, soil type, topography, accessibility. So they play an important role. So these we call it as the physical and the technical factors which contribute to the value. Infrastructure facilities. So good network of the road, water supply, drainage, power supply, and telecommunication, and a prominence and the placements, main road, by lane, dead end road, remote area, location. See, these are all the with respect to the prominence and the placements. What are the building characteristics? The type of the building is load bearing, RCC frame, age, expected future life, specification, present condition of the building, maintenance and the repairs, liability, obsolescence factors. So the obsolescence factors may be the functional or maybe economical. Don't worry regarding this depreciation and also the obsolescence. So they will go in detail with the cost approach method. Okay. So functional aspect, optimum use of the inner space with the minimum wastage of the lobby space, good planning, adequate light, ventilation, high quality value, and modern habitation style, amenities, garden, lift, security system, swimming pool, car parking, health club, children's play area. See, whatever it may be, any amenities can be added, a clubhouse or whatever. Okay, so there are the amenities. Environmental aspect. So noise and smoke, smoke pollution level, sea or lake frontage, and nuisance due to the railway track, industries, airport, climate conditions, and natural calamities. So these are all the environmental aspects. And economic factors. Again, in the economic factors, you should have an idea regarding this economics, microeconomic factors and the macroeconomic factors. Microeconomic factors include the population, employment opportunities, changes in services, trade and commerce, per capita income, paying capacity of the people, or the purchasing power of the people, and the trend of the city growth and the expansion. So all these things we are going to discuss in the microeconomic factors. Macro means so in big. So that means this is a domestic savings. So fixed capital in for formation in real estate sector, flow of capital investments, government securities. So that means the rate of interest, savings, capital information, flow of capital investment, and all these things will be studied in the macroeconomics. So we should have the basic knowledge of the microeconomic factors and also the macroeconomic factors to derive the value of a property. What are the other economic factors of demand and supply of the real estate? Income fetching capacity of the property, economic and the taxation policies of the government. Because say if the property is sold with the GST, so he has to add the 18% is extra is to be added. If the property is sold without GST, so then taxation policies also plays an important role. Capital gain will play an important role. So usually, suppose that just to avoid the tax, what the people will do is, so they will register the property for the lesser value and they will collect the black money. And once if they collect the black money, so again it is very difficult for them to put into the life cycle and also to make use of the black money. So usually these taxation policies with respect to the GST or with respect to the capital gain. So usually that also plays an important economic factors and will have an effect on the property value. Okay. Just to avoid the tax, they may be registering the property for the lesser value. Okay. Legal factors include the following acts: whether the property is governed by the Rent Control Act or not, Urban Land Sharing Act or not. It may be for the green belt area, it may be yellow zone or the red zone or whatever it may be. And actually ecological restrictions like the coastal regulations, it may be near the seashore or like that. In such cases, as per the Coastal Regulations Act, no permanent structures cannot be constructed in that area unless and until so they can be used for the some activities like the shipbuilding or the port or the cargo or whatever it may be. So in such cases, and even in the when you take it to the in the many of the cities and also the towns, existence of this lake, nala, buffer zones, and Rajkalwe, and also the natural streams. So we should take care of the ecological restrictions, whether that will be building can be constructed or not, so that say we should maintain the ecological balance. So we should not affect the ecological balance. So Coastal Regulation Act we should take into consideration, and also the Green Tribunal orders. For example, in the Bangalore, the NGT is there, National Green Tribunal. I think a National Green Tribunal, it will be operating in all the major the states of all the major states of all the entire country. So it will be regulating the, otherwise it will be putting some restrictions on the construction of the buildings in the buffer zones such as the Rajkalwe and also the lakes and also the natural streams and etc. So Transfer of Property Act with the lease provisions, covenants under the lease deed. Covenants means the terms and the conditions of the lease. Easement Act for the licenses, Land Acquisition Act, Town Act and Town and Country Planning Act, Income Tax and the Wealth Tax with respect to the taxation, that is the capital gain, etc. Safety distance from the industrial belt, green belt, etc. Hazardous store, etc. Hazardous store means to store the petroleum product and also the blasting materials which are used in the quarrying and all these things. And any inflammable and also the fire sensitive materials. So high restrictions rules near the airport area. So that means high-rise building should not be constructed at the means to say that, for example, recently there was a air crash in the Ahmedabad. So what happens? So it fell on the building and also the many of the medical students in that building has got injured. So I don't know whether it is constructed as per the bylaws or not, and whether in the particularly the airport area no high-rise buildings are not allowed. So usually they have to take the NOC from the airport authority before construction of the building or like that. Even suppose if they have not constructed or if they have violated the rules and the regulations, the persons who are suffered from that air crash damage in the building, they may not get the insurance or like that because if it is an illegal. So that is why and safety distance from the high tension line. So usually in the high tension line is going means in any site or like that. So the building construction is not allowed in such areas. Suppose if that is constructed and if anything happens, then also the person who is affected from the high tension line, they will not get any compensation either from the client or from the any department. Okay, railway track, highways, and also the water bodies, nalas. So, what is the safe distance from the high tension line? What is the safe distance from the railway track? And what is the safe distance from the water bodies and also the nalas? So, these are all the legal factors. So, particularly, all the values nowadays today are well equipped with all these legal factors because they are not doing the real estate valuation; they are doing the real property valuation. So, that is why. So almost all the values, they are all verifying the legal factors. So particularly as a valuer, we need to understand the basic of all these laws. So and base at least even though we are not advocates to study the entire law book, we should have a basic knowledge of these laws. So while arriving or deriving the value and applying the value to the real estate, real property. What are the social factors? Social factor means the locality, neighborhood. See, why I am talking about is the neighborhood and also the civic communities means in the neighborhood means so particularly so some community dominant areas will be there. So in such cases, nobody is ready to purchase the property and it will fetch a very less fair market value and realizable value and also the sale value will be very less. So neighborhood plays an important role. Otherwise, if the neighborhood, suppose if any celebrity is staying in that street or in that area, so usually that people wants to buy such a property nearby that celebrities road, otherwise nearby the celebrities road. So that neighborhood also plays an important role in arriving the value. Civic communities we have discussed that is basic communities and also the derived or the arrived or adapted amenities like the Wi-Fi network, so solar and whatever it may be. Then what are the basic amenities? There is water, air, water, and also the sewage, electricity, etc. And population also plays an important role. Means of communication by road or train or by airport. Otherwise, having the provide aircraft or whatever it may be. Next, the prestige aspect. So, political factor. Prestige aspect means somebody they want to purchase a property in a well-developed and good, properly planned layout. Why? Because it is a matter of a prestige for them, so that they in the prestige or the planned layout. What happens is they will be having a broader road and a very good park and all amusement and amenities will be provided well within the well within the arm's length. So in such cases, so usually the properties will fetch more. So means of communication. Yes, if you are having access to the train, if you are having access to the road, by taxi or by nearby bus stand or whatever it may be. So in such cases also the property will fetch more value. And political factors and also the racial habitation and religious factors. Sir? Okay, so these are all the social factors and religious factors. So usually religious factors means so one community of people or the religious people they want to stay in one area. So usually I told you one example. I gave the example of the James colony or where all the sorry sir, any questions? Sir? So other than this political and racial factors, so some personal factor may also be there and the stigma effect and anything you attach it with the property that we call it as a stigma. So usually it may be with respect to the vastu or some other things. So that we call it as a stigma aspects. Now, after discussing the factors which affect the real estate value, so we will pass on to the next chapter. There is a types of ownership. So individual or the sole ownership, single ownership, there is a with the 100% right. That is that we call it as a sole ownership. Otherwise, so the property will be having a single owner. Next one is the joint ownership. Two or more owners holding the property jointly. If one joint owner dies, his rights will go on merge with the surviving joint owner. So usually, sometimes what happens is the property will be registered in the name of the husband and the wife. So that we call it as the joint ownership. Suppose in the joint ownership, if one person dies, means they automatically the rights of the person will be transferred to the other surviving person. What is meant by the co-ownership? It can be two or more persons and tenants in common. If one co-owner dies, his right goes to the legal owner. For example, you kindly make a difference between the joint ownership and the co-ownership. Say the father is having 2 acres of the land. You will be having 3 children. 3 children. Okay. So father will be having 2 acres of the land. And so I'm getting some disturbances. Hello.
Yes.
I'm getting some disturbances. I think you are audible or not? So what do you mean by the co-ownership? So a father will be having 2 acres of the land and he will be having 3 or 4 children. So out of these 4 children, if one person dies means, so what happens to the property? So it doesn't mean that, so if one person dies means the entire 2 acres of the land will be shared with the 3 persons. No, it is not like that. It will goes to the its legal heir. That means it's a son or its wife. Okay. So that we call it as a co-ownership. Don't confuse yourself with the joint ownership and also the co-ownership. So in the joint ownership, what happens is 2 or more persons will be there. See, if one person dies, see the property entire ownership will be transferred to the other joint owner. But in the co-ownership, it is not like that. It will not be transferred to the other persons. So it will be inherited. It will be transferred inheritantly. So that means it will goes to his wife or his son. Okay. So that is the difference between the co-ownership and also the joint ownership. Ownership held by the firm. Firm is a legal entity. Ownership held by the individual partners, firms, or not for the firm itself. Ownership by limited company. Directors represent the company. Ownership by the trust. Ownership vests with the trustees. Ownership by Hindu undivided family. Karta of HUF manages the property. So particularly, so this will be in your multiple choice question. So who will be the Karta in the Hindu undivided family? So the Karta will be the father. Father will be the Karta in the Hindu undivided family. So I think as per the Hindu Succession Act, old Hindu Succession Act, the Karta means so head of the family. Head of the family means so the father is the head of the family. So nowadays, I think after making some amendments and all these things, I think they have modified this into. And suppose if the person is having only the female children, 2 children, then who will become the Karta after some time? So the only the female issues will be there. In such cases, it doesn't mean that only the father will be the Karta, and then after the father, and who will become the Karta of the family. Karta means the head of the family. So usually, so that is why even the females, they are also having some rights for the property after they making some amendments in the Hindu Succession Act. So let us not discuss in detail with respect to the this real estate laws, because so in the next class you'll be having some more theories with respect to the real estate law. Yeah. So next, ownership of the cooperative society. There are 2 types. One is a tenant ownership society and the tenant co-partnership society. Society purchases the land and leases to the tenant members who erect the buildings on the plat leased to them. That we call it as a tenant ownership society. Next one is a tenant co-partnership society. Builder constructs a building and sells it to the individual flat purchasers who subsequently form a society for the maintenance and the management. So that we call it as a tenant co-partnership society. And other than this, one more terminology will be there. So Usually in almost all the cities, there is a defense area will be there that we call it as a cantonment area. So ownership of cantonment area in the city are always with the military or the central government. So that is very important. So nobody will get the rights over the property. Valuer has to consider all the ownership aspects while selecting the valuation methods, because applicability of the acts, that is a rent act, transfer of property act affecting the valuation, may not be the same in each case of the ownership. So that is very important. So while assessing the value, we should think of whether it is a co-ownership, whether it is a joint ownership, whether it is a single owner. Okay, so we have to decide. So then we have to do we can give the value. Vested or contingent ownership. Life interest holder can be both owner and occupant. He may be only occupant depending upon the settlement deed. And ownership by mortgage. It may be legal or equitable.
So what is the difference between legal or equitable?
So usually the banks will mortgage the property. So there are different types of mortgage. One is a simple mortgage, equitable mortgage, and mortgage by depositing the title deeds. So different types of mortgage will be there. I think you are going to study all those different types of the mortgages in the real estate law. Okay. So usually the banks will have a practice of two types of mortgages. One is a simple mortgage and another is the equitable mortgage. And the equitable mortgage, otherwise mortgage by depositing the title deeds. Okay. So your ownership by the mortgage. See, by getting into the mortgage, the banks will be having certain rights. Okay. So that we call it as it may be a legal or equitable ownership. Okay. Even the owner will be having certain rights. Even the mortgagor, otherwise the bank will be having certain rights.
That is what I'm asking. Like, is there a difference between legal ownership and equitable ownership?
Difference between legal or
Equitable ownership.
See, there may be some difference, because see, it depends upon the mortgage. Particularly in case of the partnership act, and what happens is, suppose if I am if there are 2 or 3 of the partners, means they will be having the equal share in that property. So that we call it as equitable ownership. And see, that may be because of the understanding, and that may be through the legal aspects. Okay. So equitable ownership may be through the legal, or it may be through the understanding, or it may be with there is a memorandum of understanding. Types of occupancy in the real estate. Premises could be in the occupation of the owner himself, or holding 100% right in the occupied property. So that we call it as a 100% ownership. Premises could be occupied by one of the co-owner holding only the 25% undivided share. So usually in the flats, what happens is, so they will give the undivided share of the land. So do you mean that, so suppose if he is having the undivided share, can he have the he is having the full rights over the property? He is having the rights over only that flat. The other co-owners of the property holding the 75% of the share stay with. For example, there are most of the common areas and common parking, and also the walkway, lift, and everything will be there. So that we call it as a common area. So the homeowners, they are also having certain rights, and usually that UDS, what we will say, so that may be about 25%. So they will be having only the right for the only the 25% of the share. He may be enjoying the flat in full, but the entire rights is over the only the undivided share of the land. So particularly in case of the individual buildings, what happens is the premises could be in the occupation of the owner himself holding. For example, in individual buildings, so the entire land belongs to him and entire building belongs to him. Okay. But in case of the flat, it is not like that. So you will be having undivided share. So how much of the share? So that depends upon the 25%, 20%, or whatever it may be, how much the builder has given. Okay. Premises could be occupied by the tenant who protected by the various provisions of the Rent Control Act. I think the Rent Control Act is not practiced in most of the states. I think in the Mumbai it was there. I think it is also abolished. In Kolkata it is there. There is a West Bengal. It is also abolished, I think. I don't know. I think in the Tamil Nadu it was there. I don't know whether it is still in the practice or not. That is, it is most of the premises are controlled by this Rent Control Act. Sir, from one person is from the Chennai. So is the Rent Control Act is prevailing in the Tamil Nadu, or it is also they have made an amendment and they have clear right now?
No, it's prevailing, sir.
It is prevailing. Yes. So in the Tamil Nadu, so Rent Control Act is there. So whether if the property is occupied by the tenant, it will be governed by the Rent Control Act. So it is not possible to for the owner to vacate him immediately. Otherwise, so he cannot increase the rent as he likes. So there are so many constraints will be there. Suppose if it is under the Rent Control Act. Okay, it could be occupied by the occupant related to the legal tenant of the premises, and it could be occupied by the licensee who has entered into the leave and license agreement for the 11 months. So that means it may be for the short-term lease or the long-term lease, depending upon the term. Occupant could be a lease company having a 3 or 5 years or the lease contract with the owner of the premises. So it may be a lease or a tenant, or it may be for the license or whatever it may be. So the people will be having the different types of the occupancy in the real estate. As a valuer, when you are valuing such things, because so that is why when you are valuing the flats, the terminology you are taking into the consideration only the super built up area or the built up area. Otherwise, the so other than the super built up area, your carpet area. Carpet area. So you're going to take the only that you're not going to deal. You are right. What is the land value? What is the building value? Or like that. Am I right? So because the person will be having the different occupancy rights, occupancy rate. Suppose if they sell the property, the other person will get the occupancy rate. That's all. Okay. So that is the difference. We need to understand what is the rights he is having over the property. But in case of the individual building, we are going to give the value for the land. We are going to give the value for the building. But in the flat valuation, we will never mention the land value. Okay, it could be occupied by the. Okay, so this is covered. So I think I have covered the 6 topics. So this is I'm going to take the next topic now. I think so. If you are having any questions related to these topics, you can ask. Because this 7th chapter or the 7th topic is very, very, very important. Because in this 7th chapter, I'm going to give the definitions regarding what is meant by annuity, what is meant by capitalization, and what is meant by rate of capitalization, what is meant by year purchase, sinking fund, redemption of capital, and reversionary value. See, if you want to attend the case studies, this chapter is very, very important. And in this topic, I'm going to explain, I'll give small examples also. Small example, that is small typical problems where you can understand the meaning of the sinking fund, where you can understand the meaning of the capitalization rate, where you can understand the reversionary value. And the simple problems also I will solve here itself. And this will form the basis and the basics for the case studies. Okay, even while attending the case studies classes on the Friday, so be thorough with the real estate valuation slides. Otherwise, at least you just refer this chapter number 7 or otherwise the topic number 7 and attend the case studies class. Otherwise, see in the case studies class, I will directly dictate the formulas and I will directly start the case studies because I have to cover the entire case studies, income approach, cost approach, and market approach. All the case studies, different types of case studies you may come across in the examination. I'm going to explain all the case studies. So that means the problems and the solutions, So in between such so you should not ask, sir, what is meant by annuity and how to arrive that one, and what is meant by YP single rate, what is meant by YP dual rate. Because today only I am explaining the basics with respect to the YP, that is a year purchase. What is the meaning of the YP and how to arrive the YP? What is YP single rate? What is YP dual rate? How to calculate the sinking fund and what actually meant by the redemption of the capital. Okay, everything I will explain. So be prepared to listen to my words. So before that, if you are having any questions, we will have a question and answer session for about 2 or 3 minutes. Out of these six topics, so you can ask any doubts or the questions. So usually, so when you are attending the MEP classes, you will not get that doubt. Once you attend the examination, you will get that doubt. Okay. So any doubt regarding all these six chapters which I have covered right now? Otherwise, so if you have no questions, I have a break of about 2 or 3 minutes or 5 minutes. Okay, I will continue with the annuity and capitalization. Only 5 minutes. This 5 minutes I will continue after the 6:30. So I think up to 7 o'clock I have to continue.
Okay, sir.
No questions? Okay, sir. Take a break for 2 or 3 minutes. Just 5 minutes you take. Yeah, I will continue after 5 minutes. Okay, sir, I will continue with this seventh chapter, that is annuities. And remember very well that the annuities, capitalization rate, rate of capitalization, year purchase, sinking fund, reduction of the capital, reversionary value. See, all these things are related to the income approach method of valuation. All these things are related to the income approach method of valuation. Okay. So that is why you need to understand, say, unless and until you understand these terminologies and also the definitions and also this formula, you will not be able to understand the income approach method also. After the income approach method, you will be not be able to understand the case studies also. See, usually in the case studies, what happens is, so by using the cost approach method, so you will get one problem. Okay. Cost approach means so everybody will do it. That is value of the land and value of the building. So in that building, so doing some depreciation, and so you'll get the building value, X the building value plus land value, that gives the market value. So that is a cost approach method. But suppose in 99.9%, so you will get questions on the income. So that is why you need to understand the formulas for the annuities, formulas for the capitalization rate, and formulas for the sinking fund. Now, value is not intrinsic or inherent in anything. It arises due to the utility and also usefulness. And a value comes into practice only when the transaction takes place in the market, is called the exchange value or the market exchange value. Second, interest in the property, there is a legal right to derive the benefits of the legal use. Net income from the property is considered as an interest yield. Net income from the property is considered as a net yield. It's an interest yield. Now, three principal methods of the income approach. That is a rental method or the yield method or the return on investment method, discounted cash flow technique method, profit method. See, all these methods will be discussed in detail in the income approach method, classes. Okay. Now, it is not my duty to explain the entire the three methods of the income approach. That is a rental method, discounted cash flow method, and also the profit method. So they will go in detail and they will explain in detail theory as well as the problems. Okay. Now, what actually meant by the annuity? It is defined as the net annual payment for the capital invested in a immovable property or other forms of the investment. It is defined as a net annual payment for the capital invested. Suppose if I have invested 1 crore rupees on a property, suppose if I am getting that 2 lakh or 5 lakh rupees per annum as the annual income, that we call it as an annuity. What is capitalization? It is a concept indicating the amount required to be invested by a person at present to derive the benefits from the rental income in future. Such fund is called as a capital investment. What do you mean by rate of capitalization? That we call it as a rental yield. Rate of capitalization. So in bracket, I have written the rental yield. See, it is the interest at which an investor is willing to invest his capital to get the benefits in future. For example, if I have invested 1 crore rupees, if I am getting a 6 lakh rupees as the rental income, then we call it as the 6% is the rental yield from that property. So that we call it as a rate of capitalization. So for the time being, you just understand in that much only. What is meant by the rate of capitalization? So rate of capitalization again depends upon the number of factors. So we will go one by one. What are the factors which are associated with the rate of capitalization and how to derive the method capitalization rate? Yes, sir.
Sir, what is the difference between rate of capitalization and annuity?
Annuity,
Am I
it is a
audible,
net annual. It is a net annual payment for the capital invested. in immovable property or other forms, it is annual yield. It is an annual yield. Rent capitalization and annuity.
Annuity is annual yield, and what is rate of capitalization, sir?
Sir, see, you for the time being, you just give this small definition, because in future I'm going to work out on the same, that is a annuity and also the capitalization with respect to some small examples. Next, what is meant by the capital value? Net income into YP. Now, I have not yet defined what actually mean by YP. Okay, for the time being, how to derive the capital value? Net income into YP depends on the rate of interest expected to be earned by the investment. So that we call it as a capital value. Now, so the basics for the income approach method is you should understand the year purchase. So what is meant by the year purchase? It is defined as the capitalized value or the sum required to be paid once for all in order to receive the annual income of ₹1 for the specified period of a time at a specific rate of return. See, even if you read this definition 100 times, so you will not be able to understand what actually mean by year purchase. So I will give one small example so that you will never forget this definition of year purchase. Okay, you will never forget. For example, you just say you have invested 100 rupees in the bank. You have invested 100 rupees in the bank. So after 1 year, the bank will pay the interest of 5 rupees. That is a 5%. Interest of 5 rupees. After 1 year, it will pay the interest. Okay. So that means you have got 5% of interest. Am I right? So next, what is the meaning of this YP? That 100 rupees divided by 5. 100 rupees divided by 5. How much you will get? 20. 20. See, that means 20 rupees is to be invested for 1 year to get an income of 1 rupee. I hope that all of you got it. The meaning of YP.
Yes,
Meaning
sir.
of YP, that is a year purchase, means the year I have got a 20. 20 is the year purchase. 20 is a year purchase. That means it is the amount that is to be invested today to get an income of 1 rupee after a year. To get an income of 1 rupee. See, I have invested 100 rupees. After 1 year, the bank is giving 5 rupees interest. Am I right? So that 100 divided by 5. So that is 20. 20 means that is 20 rupees is to be invested to get an income of 1 rupee. So that 20 we call it as a YP. Rather than the definition, I think I have cleared what actually meant by the YP. I hope that all of you got it. Because see, if you are unable to understand the meaning of the YP, you forget the income approach method. You just forget the income approach method. If you forget the income approach method, you forget the case studies. If you forget the case studies, you forget the IBP examination. No, I don't want all of my students to forget anything at all. Okay, I hope that all of you got the definition for the year purchase. Why I am stressing on the YP? YP means without YP, there is no income approach. Sir, any simplified definitions if you have, so you can dictate other than this? See, it is the amount deposited, otherwise amount to be deposited to get an income of 1 rupee. Otherwise amount that is to be invested to get an income of 1 rupee. So that is a simplified definition of the year purchase. Here one simplified formula is that capital value into 1 rupee divided by the capitalization rate. What is the capital value? What is the capital value? What is the capital I have invested? 100 rupee.
100.
Correct?
100.
Rate of capitalization. That is the
5%.
interest. 5%. I see, for the time being, you just understand the rate of capitalization 5%, 5% like that. So in future, so after doing several practices, you will come to understand what actually mean by the capitalization, how to derive the rate of interest and everything. Because capitalization rate depends upon the number of factors. Okay. So before entering into this income approach method and understanding this YP and everything, we need to understand the short-term security, medium-term security, long-term security, and immovable property is also considered as a sound security. So before that, so what is a long, medium, short? See, I have just, and there is no arbitrary or, so this is only a thumb rule. This is only a thumb rule. Maturity less than 5 years, that we call it as a short-term security. Medium-term security, maturity from 6 to 15 years. Long-term security, maturity from 10 to 15 to 20 years. So this is not a guideline. This is only just a thumb rule. So otherwise, you can have the medium from 5 to 10 and long-term from the 10 to 20. So that is also good. But usually in the income approach method of valuation, whenever we come across whenever we say the short term, long term, medium term, so we will be having some thumb rule to define what actually mean by the short term, what actually mean by the medium term, what actually mean by the long term. But the different authors prescribes the different years for the short term and the medium and the long term. But again, why the different authors will tell you the different things? Why Nagaraj is telling that 5 and 6 to 15? See, again, it depends upon the type of the property to decide whether to treat it as a short term or whether to treat it as a medium term. Otherwise, whether it is whether to treat it as a long term. Okay, it depends upon the type of the property and the covenants associated with the property and the terms and the conditions associated with the property. So once if you go by step, you will be able to understand all these things. Okay. For the time being, you just understand there are two types of security. One is a short, medium, and a long. Okay, don't stick on to this 5 or 6 to 15 and 15 to 20. So sinking fund. I think most of the, whether you are a mechanical engineers or the land acquisition, that is a civil engineers or whatever it may be, 90% of all the engineers know what actually mean by the sinking fund. It is this fund. It is a fund kept aside to rebuild or to reconstruct a project or a building. In my simple words, I am telling. In my simple words, sinking fund. It is a fund created or kept aside to rebuild or to reconstruct the property or the building. So once if it's a lifespan is over. Okay, the fund which is gradually accumulated by way of a periodic annual deposit for the replacement of the building. For example, if the building is constructed today, it will be depreciated. Otherwise, it will lose its appearance or the income fetching capacity will be lost after 60 years. Because usually the lifespan of the building is considered as 60 years. See, after 60 years, what happens to the building? So the building used to be demolished and again one more new building used to be constructed. But where we will get the fund? So that is why, so what happens is year by year. So starting from the beginning, so some fund will be kept aside to rebuild the project or to reconstruct the building. So that fund we call it as a sinking fund. So this sinking fund we also call it as an emergency fund. Sinking fund we also call it as a emergency fund. So the number of questions will be there in the examination: sinking fund and emergency fund. So they may ask you, otherwise they may give some small problem and ask you to calculate what is the sinking fund amount. Okay, by using the formula you can calculate that sinking fund. I'm going to give you that formula. See, the sinking fund formula is very simple. That is S is equal to, suppose if you consider that is fund as a S, R divided by 1 plus R to the power of 1 plus R all to the power of N minus of 1. Now You just see what is the terminology. S means the total amount of sinking fund to be accumulated. Total amount of sinking fund to be accumulated. N, number of years required to accumulate the sinking fund. And a rate of interest in decimal. Next, ASF, that is annual installment required. ASF, that is annual installment. So there is a total fund required, and there is an annual sinking fund installment required. Annual sinking fund installment required. That is equal to ASF, that is equal to C into S.
Sir, what is C?
So there is a capital. See, if the building cost is about 1 crore. 1 crore. So what is the annual sinking fund that is to be kept aside? So there is a total capital value, C. So I will explain with this one small example also, some small case study also. Okay, don't worry. So when you are coming to the case study class, so you should understand the formulas. You come with the formulas. Otherwise, don't ask in the middle how this formula has come. And this even the terminology also. What is the meaning of S and what is the meaning of the small r? What is the S and what is C and everything. Now I am going to take one small example. So before a small example and then some more theory. Sinking fund calculation will be afterwards. Okay, I will take case study afterwards. Okay, now I think all of you have understood what is meant by sinking fund. Now, a rate of, that is a recoupment of the capital and the redemption of the capital. So two terminologies you have to understand. What is this recoupment of the capital? This rate is a return is normally adopted when income is a terminable income to recoup, to get back the capital invested in such a type of property, like a leasehold property where income would be seized after some years. This rate of interest is adopted. This rate is also called the rate of recoupment of the capital or the accumulative rate of interest. See, rate of recoupment and also the accumulative rate of interest, they are all one and the same. They are all one and the same. Rate of recoupment for sinking fund for the building is therefore adopted. So just to recoup or just to accumulate this one, some rate is adopted. Some rate is adopted. For example, here I have given that formula, So here some rate I have used. So that is a rate of interest in a decimal. So what is that rate of interest? Here. So what is that rate of interest that is to be adopted to accumulate that sinking fund? Otherwise, to get back that capital. If I have invested 1 crore on the building, after the 60 years, I need to recoup that 1 crore rupees to rebuild the project. And then at what rate of interest the amount is to be kept aside? So that we call it as a sinking fund factor or the sinking fund amount. And this sinking fund is just to recoup the capital, otherwise to accumulate the capital. So which is going to terminate after the lifespan of the building. Now, usually, so what is the sinking fund factor adopted in the income approach method? So usually 3 to 3.5%. So usually 3 to 3.5%. Otherwise, it may vary from 2.5 to maximum of 3.5%. See, why we are adopting this small rate of interest for the sinking fund? Because, see, it will be continuing for the 60 years, otherwise the 70 years. That means for the entire span of the lifespan of the building. So that is a one thing. And one more thing is, so usually for the sinking fund factors, the least possible rate of interest. For example, if you keep that 1 crore rupees in a savings bank account, so normally you will get 2%, otherwise 2.5%, otherwise maximum 3% of the interest. So based on that, so usually, so they will adapt the sinking fund factor as a 2.5%, otherwise as a 3%. Okay. Next, rate of capitalization. See, other than getting back my capital, I want some interest on the capital. I have invested 1 crore on the building. It is a shopping complex. The first thing is I should get back my money. That is a 1 crore rupees. I should get back to recoup the, otherwise to reconstruct the building. So that is a sinking fund factor I have allowed. Other than that, since I have invested 1 crore rupees on the project, I should get some remuneration. I should get some income. So that we call it as a remunerative rate of interest. Okay. So don't confuse yourself with the recoupment rate of interest and also the remunerative rate of interest. So usually that will be more than the 8% or more than the 9%. Otherwise, it may vary from the 8 to 9%. Why I am giving that 8 to 9%? See, you are starting your company valuations right now. I think you, even though you may be having the experience of about 10 years or 20 years or 30 years in the field of evaluation, I don't know. But since you are appearing for the IBB examination just now, I will treat you as the beginners. See, if you keep that 1 crore rupees in the bank, how much amount, say, if you keep it in the fixed deposit, how much interest you will get? Maximum is 7.5, otherwise 7%. So usually, see, when we invest on the real estate project, we expect some more amount than the bank fixed deposit. See, bank is giving the 7% without any risk at all, without any risk. So, but I am taking a risk. I am investing on the project. I am investing on the building. So I should get at least 1 or 2% more than that. So that we call it as a remunerative rate of interest. So it may be 8 to 9%. See, 8 to 9% may be a good. See, if the capitalization rate is a less, then the risk will be less. If the capitalization rate will be more, then the risk will be more. Okay. In certain projects, so usually that happens, say, the people will be investing here and there, and there's some GTR like that. So they will be investing the funds, monthly funds. It's so in some personal, with some persons. Suppose if he cheat, then the entire amount will go. So, but he is ready to pay the interest of about 14%, 15% or like that. So, more the interest means, more remunerative, more income means the risk will be more. But why the bank will give only the 7%? There is no risk at all, and your amount is guaranteed. Interest is guaranteed. So that is why the remunerative rate is only 7%. So when we invest on the real estate project or like that, we need to expect at least 8% or the 9% without the rental income or like that. So that we call it as a remunerative rate of interest. So usually for the sinking fund, it will be around 2 to 3%, and for the remunerative rate is 8 to 9%. Now, I think you got clarification regarding the recoupment of the capital and the rate of recoupment and also the remunerative rate of interest. Okay, because in the income approach, these two will play the basis. These two are the basis for the valuations. Now we have understood three terminologies. One is the sinking fund, a recoupment rate of interest, and a remunerative rate of interest. Recoupment rate of interest will always be less, so that is for the sinking fund, and a remunerative rate, it will be more than the fixed deposit or like that. Next, what is meant by the rate of reversion, or the deferred rate, or the net NPV, or the net present value, deferred value, or the rate of reversion. So they are one and the same. Then next, how to calculate that rate of the deferred value or the reversionary value. See, it is the rate of return at which the investor is willing to invest his funds in such a property, which will be received by him at a future date. That means, see, in the leasehold property, what happens is, when the term is over, say, the land belongs to one person and the building belongs to one person. The lessee who has taken that land for the construction of the house or the factory or the building, he has invested money on that building. Okay. After the when his term may be about for the 25 years or 30 years. So once if his term is over, he will leave the building and he will leave the land and go away. See, that will, the land and building will come back to the original one. So that we call it as, when it come back to the owner, what will be the value of the land? That we call it the reversionary value of the land. Okay. Otherwise, the deferred value. So depreciation, I am not going to explain this depreciation in detail. but I will share the slides because so depreciation will be dealt well in the cost approach method. Different types of depreciation and obsolescence, everything will be get there. But for the time being, you just understand there are different types of depreciation. One is the physical, so that is just because for the wear and the tear. Other than that, the obsolescence. Obsolescence, there are two types. One is functional obsolescence, and another is the economical obsolescence. So method of calculating the depreciation, there are different methods are there. One is the straight line method, constant percentage method, sinking fund method, quantitative method, return down value method. Even though it is not a part of my syllabus, why I am dictating means I am going to take again the case studies. That the case studies involves the depreciation. So that is why just to have a brief introduction regarding the depreciation, I am sharing all these slides. Now you have got the idea regarding the deferred value. Otherwise, the net present value, otherwise the reversionary value. How to calculate that one? I will give you the formula. Next, the year purchase. You have understood that what is the meaning of the year purchase, and recoupment of the capital. See, that is the sinking fund. How to calculate the sinking fund? And next, remunerative rate of interest. That means we need some profit on the project, so that we call it as a remunerative rate of interest. Now we are having in our mind three terminologies. One is the sinking fund, recoupment rate of interest, remunerative rate of interest, and also the deferred value or the reversionary value. Now the depreciation. So there are 4 or 5 methods are there. There are hundreds of methods will be there for to depreciation. Even we can do the depreciation in the lump sum method also. Okay. So there are 5 commonly used depreciation methods in the valuation. Straight line method. So original cost minus of the scrap value divided by life in years. So you will get the annual depreciation. So usually commonly used method in valuation. Constant percentage method where we will be using some formula, and the rate of depreciation will be determined, and we will get the depreciated value. Okay, sinking fund method. And the quantity survey method, and the return down value method. So usually as a valuer, we need to understand, because all your case studies will be with respect to the constant percentage method and also the straight line method. Okay. So before coming to the case study classes, so you just study the formula of the straight line method and also the constant percentage method. So construction, the use of the valuation tables. So what is the use of this valuation table? And so who is the person who find out, otherwise investigated this valuation tables? So Richard Perry, I think. Richard Perry is the person who formulated, otherwise who framed these valuation tables. What is the use of this valuation tables? For using these valuation tables, we can very easily calculate the YP single rate, YP double rate. From the table itself, we can very easily calculate. See, if you know the number of years and the rate of interest, we can very easily calculate the YP. We can very easily calculate the rate of interest. So that we call it as a valuation tables. So these valuations tables are nothing but the ready reckoners. And this will be used as a guidance to determine the investment value or to assess the project, say whether it is feasible or not. So we are going to use this valuation tables. So valuation tables are framed by the Richard Perry. So there will be a one multiple choice question in the examination. So usually what happens is a mirror arms table, I think here. So see, ready valuation takes place at the available by the mirror arms valuation table. See, mirror arm is a publisher of these valuation tables. So usually in almost all valuation books at the end of the book, so they have given some tables. You just go through the tables. How to calculate the simple interest amount, simple interest, OP single rate, double rate. Everything is, so a number of tables will be there. They are nothing but the valuation tables. See, Miraram's valuation. She is a publisher who published these valuation tables. So usually in the examination, so who framed her, who find out, or who determined her, who is the who framed this valuation tables means it is a Richard Parry from England. So he who framed this valuation table. But so usually, so in the almost all valuation books refer Miraram's valuation table. So usually they will pick the Miraram's. So he is only the publisher. If you get the same question in the examination, you just don't forget to click the Richard Parry. Okay. Next, simple interest and working formulas. This is a simple interest formula where I is equal to P into R into N. So this is, I think, even in our 7th standard we have studied this simple interest formula. I is the total amount accrued in given period. P is the principal amount deposited. R is the rate of interest adopted. N is the period in the number of years. A is the gross amount including the principal sum and the total interest. Here I am going to give one a small example. A person deposits a sum of 5 rupees. See, he has deposited 5,000 rupees at the rate of 4% simple interest. Rate for 5 years. Calculate the gross amount receivable after 5 years. So P into R into N. So this is a simple formula. I think so. These things we have studied in the 6th standard. Since after the study, see, we have forgotten all this simple interest formulas and also the compound interest formula. If you have forgotten, so don't worry. So just remember your childhood days and the mathematics teacher so that you can remember this simple interest formula and also the compound interest formula. So 5,000, so that will be the interest. Next, 5,000 into 4, that is the rate of interest. 4 divided by 100, that is since it is in percentage. So that is for the 5 years. So the total interest will be around 1,000 rupees. So total amount will become how much? So principal into interest, 5,000 plus 1,000, there is a 6,000 rupees. So that will be the A. Next, what is the compound interest? See, compound interest formula is very simple. That is I is equal to interest is equal to 1 plus R to the power of N. Gross amount will be is equal to principal into 1 plus R to the power of N. Okay. So this is a compound interest formula. For reversionary value, you have to just reverse this one same. That is 1 divided by 1 plus R to the power of N. That we call it as the NPV value. Otherwise, the deferred value. Otherwise, the reversionary value. To calculate the reversionary value, 1 divided by 1 plus R to the power of N. Otherwise, to calculate the NPV, 1 divided by 1 plus R to the power of N. Otherwise, to calculate the compound interest, we need to calculate P into 1 plus R to the power of N. Okay. Now, the same rate of interest is a 5. Sorry, the rate of interest is a 4, and it is for the 5 years. What will be the compound interest? You just see 5,000, 1 plus 4, 4 to the power of 5. So that will be 100. 5,000, 1.04. So the annual amount will be 6,080. So here 80 extra is compounded interest. So whereas in the last case you just see 6,000. See, if you calculate by the simple interest, it will be 6,000. Otherwise, if you calculate interest by the compound method, that means 1 year interest will be added to the capital and again it will be compounded. So totally he is getting 80 rupees extra. That is the beauty of the compounding. So those who are doing the business of the shares or the mutual fund, they will be understanding. So in the long term, how their money will be compounded. So that is the beauty of the compounding. Okay. So because the amount will be compounded, and the amount will be compounded in terms of compound interest formula. Okay. Calculate the gross amount receivable after 7 years period of the capital sum of 8,000 deposited in a institute at the rate of 3% interest rate of solution. Now, so calculate the gross amount receivable of the 7 years. So term is 7 years. Next 3% is the interest rate. Next the principal is 8,000. So how much you are going to get? 1.03 C to the power of 3 divided by 100. So that is a decimal. Okay, 0.03. 1.03. 8,000 into 1.279. So you will get 10,232. So this is the gross amount receivable after 7 years. I have invested 8,000 rupees and the compounding rate of interest is 3%. Now you have understood the simple interest formula and also the compound interest formula. Now, the present value. So in the Mirror-Arms table, otherwise the Paris table, so you will get directly the value. So if you just go to the rate of interest and also the number of years, you will get the value directly. So that is the beauty of the tables. So in almost all the valuation books at the end of the book, they have given the valuation table. The present value. So present value, the same formula can be used for the deferred value or the reversionary value. Just to calculate the deferred value and also the reversionary value, 1 divided by 1 plus r to the power of n. See, principal into 1 plus r to the power of n indicates the compound interest formula, whereas the reverse of that is a present value formula. So you should not forget these three formulas. One is the simple interest formula, compound interest formula, and the present value formula. Present value formula 1 divided by 1 plus r to the power of n is also called as the deferred value formula or the reversionary value formula, otherwise the net present value formula. Okay. Now, one simple example to understand the net present value or the reversionary value. See, a lessor will receive back a leased property worth rupees 2 lakh. A lessor will receive back the leased property worth 2 lakh after 10 years. See, the property worth 2 lakhs, but he is going to get back his property after 10 years. Calculate his present worth by adapting this rate. See, the property worth 2 lakhs. See, I have used only the small amount as for the calculations. Don't understand that for the 2 lakh rupees, say which property will get. Don't ask such questions. Okay. So I want all of you to make you to understand. Sir, yes, tell me.
So how will we calculate these kind of calculations without calculator? Like 1.06 raised to power 10?
Sorry, if it is a physical class, I would have shown you. So now, because see, you are having liberty to use the calculator in the examination.
Sorry?
You are having liberty to use the calculator in the scientific calculator in the examination.
Scientific calculator?
You can use the calculator.
Sir, we can't use it. It is specifically mentioned.
Sir, that one calculator is not used.
We can't use a scientific calculator. That is mentioned in the. We can't use a scientific calculator.
No, sir, scientific calculator we can use, I think. Scientific calculator we can use.
Okay, sir.
Okay, I will confirm with the recent circulars, sir. But when we have passed the examination 3 years back, we are using the what is the higher version of that calculator? See in the calculator some more. What is the higher version of that one calculator? Scientific calculator you can use.
FX82.
Sir, FX82 and FX100 that we can use.
100 not allowed. Maybe.
Yes. Because we have used it. Suppose I don't know whether any recent circulars are there, but without that, it is not possible to calculate this 1 plus r to the power of n and like that. FX82 or FX100 we can use because I have also used that calculator. Otherwise, it is not possible to multiply all these things. So, okay, no problem. I will, anyhow, I am taking the classes on case studies, by the time I will just confirm with the circulars. But I have used it at FX100 and FX82. FX100. So 6 divided by 100, you make it a calculator, sir, in simple words. So you will get a decimal that we call it as you get a 0.6, 1.06. So exponent, say inverse exponent option is there in the calculator. Exponent option. See inverse exponent option. See 1.06 first you 1.06 to the power exponential component 10. If you make, you will directly get the answer. Also that is 1.79. So 1 divided by 1.79 automatically you will get a 0.558. Otherwise, so whatever the things you will get, so if you may press 1 by x option is there in the calculator. See, if it is a physical class, I would have shown. I don't know how to show it in the online classes. But so ask your any of your close friends, so they will guide you. So you can use that calculator, that is FX100 or FX82. You can use in the examination. So I think so all of you have understood how to calculate this on net present value. Huh? So any doubt regarding this one, sir? So these are all the simple formulas and simple. So even in the examination, they may ask you such questions for the 1 marks. 1 marks, because only one simple formula will be there, and one for the multiple choice question also they can ask simple questions like this. Find out the present amount payable for the instrument which guarantees a payment of the capital sum of the 80,000 after 5 years and add up 7% of the rate of the interest. See, here C is 80,000, R is equal to 7% or the 0.07, and N is equal to 5 years. PVA is equal to C into divided by 1 plus R to the power of N. Same formula, there is a 57,000. Sorry, 57,040. Okay, another small example. A land with a project. And these are all, I think, I shared only these examination problems only for 1 mark questions. The same formula for the examination questions, I think. A land with a project value of 8 lakh after 5 years, if offered today for the same. A land with project value of 8 lakh rupees after 6 years. See, after 6 years, this will be the value. If offered today for sale, what capital sum be invested today for the land? If interest rate is 7%. Again, it is very easy. That is the NPV. That is the net present value is to be calculated. 1 divided by 1 plus R to the power of N is the formula. Okay. You want to calculate the reversionary value, the same formula. You want to calculate the deferred value, means it is the same formula. NPV means the same formula. Annual sinking fund. So one table, see annual sinking fund is equal to R divided by 1 plus R to the power of N minus of 1. So this is the formula. See, in order to find out the depreciated worth of an old existing building, one has to consider the sinking fund amount that has to be set aside annually by building owner at a given rate of interest for the period which is equal to the past age of the building. So this is the reverse of finding the annual accumulated amount. See, annual accumulated amount is APV. So annual sinking fund factor is the R divided by 1 plus R to the power of N minus of 1. Okay, so I will go with one example. A municipality has to repay loan amount of rupees 40,000. A municipality has to repay loan amount of rupees 40,000 after 20 years. What amount should municipality to set aside every year to enable to repay the loan amount at 4% interest? See, you just understand this problem. A municipality has to repay a loan amount of 40,000 rupees after 20 years. What amount should the municipality set aside every year to enable to repay the loan amount? See, it has to pay back the principal as well as the interest. So what is the amount that is to be kept aside? So we are using the annual sinking fund formula, that is AS, that is R divided by 1 plus R to the power of n minus of 1. Here the rate of interest is the 4%, and CASF that will be equal to 0.03336 per year. Now, gross sinking fund amount will be 40,000 into to this much. That is, gross sinking fund factor is 1,344. So that is the amount that is to be kept aside. So you just go through these simple problems before coming into the case study classes. Okay. Next, calculate the amount. Find the required to be kept aside every year to get the capital sum of 5 lakh rupees. So the total amount that should be accumulated should be 5 lakh at the end of 20 years at the rate of 3% of the interest. Okay. Next, you just use the formula that is AS, that is R divided by 1 plus R to the power of n minus of 1. So the rate of interest is 0.03. The annual number of years will be 20. So I have substituted the rate of interest and also the year. So I have got the factor as a 0.0372 per year. Next, what is the sum assured? There is a 5 lakh rupees. 5 lakh rupees into annual sinking fund factor. So that is 18,610. See, what is the meaning of it? If I go on accumulating, there is a 18,610 rupees each and every year. See, I am keeping aside this 86,000. This will be fetching an interest of the 3%. But in total, it will fetch the amount of 5 lakh rupees at the end of 20 years. So that is the meaning of the sinking fund. Because we have to accumulate 5 lakh rupees. We have to accumulate 5 lakh rupees. So if you go on accumulating this 610 at the rate of 3%, because so this will also fetch an interest. So it may be in the SB account or whatever it may be. So it will also fetch an interest. So what is the rate of interest? So 3%. So by the end of 20 years, so to accumulate, so this much of amount, so you should go on depositing 18,610 rupees with the expected rate of interest as the 3%. So there is a meaning of the sinking fund. I hope that by with 2 or 3 examples, so you will be able to calculate what is the sinking fund when the capital sum is assured and with the rate of interest is known and the term is also known, whether it is 10 years or 20 years or 40 years. So we can calculate the annual sinking fund factor. After calculating the annual sinking fund factor, so you just multiply that sinking factor with the total amount that is to be accumulated. So you will get the gross sinking fund amount. Okay. Now, welcome to one interesting point. Now we have understood the deferred value, meaning of deferred value or the reversionary value. That is 1 divided by 1 plus R to the power of n. Okay. Now we know how to calculate the sinking fund. So that is also right. Next, present value of an amount of rupees 1 per year. That is a YP single rate. Now you know what is the meaning of the YP. That is a year purchase. Year purchase means, once again I am repeating, it is the amount that is to be invested today to get an income of rupees 1. Amount that is to be invested today to get an income of rupees 1. That we call it as a YP. Okay. Next, see, present worth of a future annual income flow of for a given period of a time, a given rate of interest could be give as the present market worth of asset generating such income. This is YP. This income flow is normally a perpetual income. See, I am the owner of the property and it is a rental yielding property. I am getting the annual rent. For how many years I will get the rent? See, throughout the life I will get the rent. So that means I'm going to get the rent perpetually. See, what about in case of the leasehold? Otherwise, if it's a tenant, what happens? Based on the terms and the conditions, they will be enjoying the property for the 10 years or the 25 years. So they will be getting the rent for only the minimum period of 10 or 20 or like that. It is not perpetual. So the time is fixed. The time is fixed. See, when it is a rented property, when it is a leasehold property, we use the dual rate of interest. See, there are a number of constraints are there in adopting this YP single rate and the YP double rate. For the time being, from the point of the examination, as a preliminary understanding of this real estate valuation. Now, YP single rate means in perpetuity. When he is the absolute owner of the property. When he is the absolute owner of the property. So you should use the YP single rate. What is YP? It is an year purchase. What is year purchase? It is the amount that is to be invested today to get an income of 1 rupee. Okay. Next, what is the formula? What is the formula for the YP single rate? When we are getting the income in perpetuity, I am the owner of the property. I am going to get the income in perpetuity, maybe for the 60 years, 70 years, or whatever it may be. When it is in perpetuity, I have to calculate the YP. I have to use this YP single rate formula. See, 1 minus of 1 divided by 1 divided by 1 plus r to the power of n, this entire thing divided by r. 1 minus of 1 divided by 1 plus r to the power of n, this entire thing divided by r. See, what is this r? Rate of interest. C, capital income receivable per year. YP, years purchase. So to calculate the YP, see why YP is important. When you are able to calculate the YP, so we can very easily calculate the value of the property. Okay. Now, so you should remember sinking fund formula, and another is the deferred formula or the reversionary value formula or the network NPA formula. That is 1 divided by 1 plus r to the power of n. See, the third formula that is to be remembered is YP single rate formula. 1 minus of 1 divided by 1 plus r to the power of n, the entire thing divided by r. So that we call it as a present value formula. And this formula YP single rate is to be used when the income is in perpetuity. Now, with a small example. I'm not going to discuss all this small example in the next case study class. I will directly take the examination problems and I'm going to explain the solution, how we can solve the problem and how to click the right answer in the examination. Because so today only as a real estate preliminary, in the real estate preliminary classes itself, I am explaining the theory as well as the formulas and also some small examples. See, what is the present value of an annuity which could continue yielding income of 2,000 per month for 20 years period at the 4% rate of interest? See, YEP, calculate, because it is in perpetuity per month for 20 years. Okay, 1 minus of 1 divided by 1 plus r to the power of n minus divided by r. So what is the rate of interest? 4%. 0.04 I would have put. What is the number of years? 20. Okay. But if you make a substitute, you will get the YP. YP. So what is the YP? 13.6 as the YP. Present value of the capitalized value of the property. C. What is the present value of the property? C. What is the C? C, here he has given 2,000 rupees per month is the yield. That is the net income. So for your kind understanding, it is always said, you understand it is a net income only. I have mentioned in the problems. Because in the income approach method, they will explain what is the gross income minus of the expenditures, outgoings. So the net income. Here I am directly taking, assuming that it is a net income means it is a net income only. Then don't ask, sir, you have taken the income, gross income without deducting any expenditures or the outgoings are like that. Okay. For your understanding, I am starting from the preliminary. So I am taking the income. Income means it is only a net income. Now 2,000 rupees will be the income per month. But actually, when we are calculating the YP or the yield, it is for the annual. It is for the annual. So usually in the MCQ, what they will do is they will give some simple tricks. So he has given the 2,000 per month. If it is a 2,000 per month, what will be the annual income? So that into 12. That is 12 into 2. That is how much? 24?
Yeah, sir, it is 24. But I have a doubt. We are not considering compounding for the entire year.
Sir?
Like 2,000 rupees per month,
Hmm.
the net present value of 2,000 rupees per month would be more than the 24,000 rupees and that at the end of the year.
Sir, see, I understand. The thing is, see, annually, see, whenever the yield is calculated, it is always for the
I got your point, but the thing is that like, we can also calculate that, na?
No, no, no.
If we calculate the effective rate of interest per month, and rather than 20 years, we calculate it for 20 into 12 per period.
Okay.
And that would be a more accurate value.
No, sir. See. If
And one more thing, like here in this slide, years purchase is 13.6, and in the calculation it is mentioned 16.3.
So, sir, there may be some calculation. You just calculate it. Just calculate it. So don't worry about the some figures. See, while preparing the PPT, some the theoretical that is a mistake will be there. See, I will.
Sir, but what about the monthly compounding?
One minute, 4, 5, 6. Because see, whenever I'm sharing these things, so you just calculate. If there is any mathematical error or the calculative error, you just make a correction. But the procedure and everything, you see, the fundamentals of this class is to 1 minute divided by 0.04.
Sir, I'm asking a fundamental question only.
Yes, sir. Yes, sir. Yes, sir. Tell me, sir.
Like, won't we calculate the monthly compounding?
Huh?
Monthly
No.
compounding.
No. See, it is only an annual only we have to calculate. See, actually, see, whenever we say rate of interest means it is not for the month. Rate of interest means it is only for the annual. Okay. So you have to calculate only for the annual. Even the YP is calculated for the year only. It is a constant. See, if there is a mathematical or a calculative error, you just make a correction and then multiply. I think the amount will be the same. I think there may be some the calculative error. Either it may be. So yeah, any of you are having a calculator, so please calculate and make a correction in this one. But this is the right thing. See, because so he has given for the month, so you have to calculate the annually. So 12 into 2000, so there is 24. So you multiply this, how much you will get it. You just check up with the calculator if you are having on table. Okay. Otherwise, please check whether 13.6 is correct or otherwise, because I don't have a calculator with me right now. Jivan, you confirm this one on my stuff. $13.6, yeah. Okay, give the calculator. Yes, it is a 13.6 only. Okay, so thank you. So that is a 13.6 only. Make a small correction in that. Now, yeah, rented shop yields are so usually in the examination they will ask you what is this type of simple questions. Yeah, rented shop yields are net rental of rupees 6,000 per year. What is the present value of this shop at 6% rate of interest? If income would cease after 25 years. So the shop will be yielding a 6,000 per year.
Sir, may I interrupt, sir?
Yes, sir.
Sir, here we come to know that there will not be calculator will not be allowed in the examination. So, how we will calculate these types of formulas?
No, sir. Say I have a doubt. I will confirm with the RVO, otherwise the recent circulars. Because when we have passed the examination in the year 2018 and 19, see we have used the calculator. See calculator, scientific calculator, FX100 and FX82 is allowed. Without the calculator, even it is not possible to calculate the depreciation and well within that the time. I don't know. I will go. I will see the case studies class will be on the Friday. By that time I will confirm with the RVO and also the recent circulars, because recently I have not studied any of the circulars of the IBBI. But the thing is very clear. So we are eligible to use the scientific calculator in the examination.
Are there any tables related to this, sir? So without
No tables. Only calculators we can use, sir. Scientific calculator, FX 100 or FX 82 you can use.
Okay, sir.
I will confirm. I will confirm by the next, because the case studies class will be on the Friday. You know? By that time, I will confirm with the recent circulars.
So nice of you, sir. So nice of you, sir.
But the thing is, see, without calculator, even I myself, I cannot. I will not be able to calculate. Otherwise, they have to give the valuation tables. See, if they give the valuation tables, there is no meaning in calculating this OIP, because directly the valuation table will give the what is OIP for the 25 years and everything. Otherwise, I will. You see, anybody who has already attended the examination? No, because you are taking the MEP classes, you know. So no, I think nobody has attended it. Okay, I will just confirm with the other.
I am already a registered valuer, IVVI registered valuer in the asset class plant and machinery.
Okay, but you are not using the calculator in the examination.
No, I have not used the calculator, but I have attended the same class in long back, about 7 years ago.
Okay.
I have attended.
But I have used the calculator because it is allowed. I think even in the circular it is there. Okay, no problem. You just give me a time so that before Friday, I will confirm with the RVO, otherwise with the circulars, whether I can use the calculator. Without using the calculator, it is not possible. It's simple. Even the depreciation and whatever these things. See, we need some calculator. Otherwise, not possible. Okay, so this is another example. Next, the present value of an amount ₹1 per year. That is a OIP dual rate. When we have to use a OIP dual rate, for the time being, you just understand the OIP dual rate means whenever the property is a leasehold property and the term is a term, the income term is only a terminable. It may be for the 10 years or the 20 years. In such cases, you have to use the dual rate of interest. It is essential some invested allow in addition to annual income from the asset. As the two interest rates are considered for the terminable income, this working is known as a dual rate of working. Okay, a remunerative rate is IR and recoupment rate is ER. In this case, we need to calculate we need to assess both the interest. That is the remunerative rate of interest and recoupment rate of interest. So again, don't ask me, see what is the recoupment rate and what is the remunerative rate. So whenever we invest some amount on the project, we are always interested in one is recoupment of the capital and another is a remunerative interest on the capital. Okay, so both are required. Okay, so because I have to get back the capital, so there is a recoupment, and I have to get back I have to get some interest on the property, so there is a remunerative rate. Now, usually remunerative rate of interest will be more because it may be around 8% or 9% or it may be 10%. That is more than the fixed interest rate. And a recoupment of interest rate. So that usually depends upon that we call it as a sinking fund rate. Otherwise, it varies from the 2% to the maximum of the 4%. So that we call it as a sinking fund amount. So present value, so this should be the formula OIP. Present value 1 divided by R plus S. Sinking fund is equal to S is equal to R. See, OIP dual rate formula is a very simple. OIP dual rate formula. OIP dual rate formula is nothing but 1 divided by R plus S. What is this R? R is nothing but the remunerative rate of interest. That is the expected rate of return. What is the expected rate of return? It is 8%, 9%, or 10%. See, that is the remunerative rate of interest. So this R. So what is this? Yes is nothing but a sinking fund formula. So to remember this dual rate. Dual rate is nothing but a 1 divided by R plus S. Sometimes for the small multiple choice questions, so they will give this remunerative rate of interest and also this sinking fund sinking fund amount, and then they will ask you to calculate. So what is the present value per year? YP. So that is equal to 1 divided by R plus S. So S is nothing but, you know, the formula R divided by 1 plus R to the power of n minus of. Okay. So this is the formula for the YP dual rate. So in this formula YP dual rate, we are using the two rate of interest. One is sinking fund interest rate, that is a recoupment rate of interest, and another is the remunerative rate of interest. So we are using two rate of interest in the dual rate of interest formula. I hope that all of you understood what is meant by YP single rate, YP dual rate, and also sinking fund. Okay, I have given all the formulas with the examples. Value of the asset will be is equal to C into YP, YP dual rate into C. So that will give the capital income received each year. So I can share one small example. A lessee took a plot on 60 years lease. He took a plot for 60 years lease, and on the plot he built a house yielding net income of 50,000 per year. After 30 years, he decided to sell the property. Calculate the present sale value of the property. If expected yield investment is 8% and the rate of redemption of the capital is 3%. So that means sinking fund rate of interest is 3%, and also the remunerative rate of interest is 8%. So big capital is 8%, small capital is 3%, whereas the N is the how much? After 30 years, C is the 15 years, unexpired lease period is 30 years. Okay, YP dual rate formula we have to use 1 divided by R plus S, where S is equal to R divided by 1 plus R to the power of n minus of 1. So sinking fund factor is equal to 0.21. Now this is sinking fund factor plus 0.08. So that is a remunerative rate of interest. So this is a sinking fund factor. So these two factors, this decimal, this decimal we include means. So we are going to get YP as 9.90%. So present value is equal to 15,000 into 9.9. Where is that 15,000? So this will be the 15,000. It is an yielding the 15,000 per year. Okay. So present value of the property is, see, 1,48,500. So that is the present value of the property. So I will share one more example. Advise on purchase price of a fully developed rental building, yielding net rent of 18,000 per year. See, the property is yielding a. So all these problems are related to the income approach method. So in the income approach method, particularly those who are taking the faculty who is going to take the income approach method will explain you everything about the YP single rate, YP double rate, and because all these formulas are related to the income approach method of valuation. Okay. Except in the cost approach method, we will be using the depreciation factor and deducting for the depreciation amount. It may be for the physical depreciation as well as for the obsolescence, and then we are giving the value. But all these formulas are related to the income approach method. So don't miss the income approach method classes. No doubt you have inevitably you have to attend the classes, but listen to the income approach very well so that you can understand the case studies there. Advise on purchase price of the fully developed rental building yielding a net rent of rupees 80,000 per year. The expected rate of return is a 10%. There is a remunerative rate of interest. So I have clarified about 10 or 12, 15 times regarding the remunerative rate of interest, your recoupment rate of interest. So don't confuse yourself, because in the examination MCQ will be based on this recoupment rate and also the remunerative rate. 10% and future life of the building is at 50 years, and adapted rate of recoupment of the capital is at 4%. Now the big capital rate of interest is R, small capital, that is a sinking fund rate is a 4, N is equal to 50 years, there is a balance, that is a future expected life is 50 years, C is 18,000, So YP is equal to 1 divided by R plus S, where S is the sinking point factor. To calculate the sinking point factor, use this formula R divided by 1 plus R2 bracket. Minus of 1, I have substituted this a small r, that is a 4%, and the number of years, that is a balance years, is a 50. Now I have got the sinking point factor as a 0.0065. YP is equal to, next you substitute these things, 1 divided by 1, 0. This is YP is equal to 9.389 per fair purchase price is equal to, so there is a net income into the YP. So net income is, so for all your understanding, I have assumed that whatever the income I have declared is nothing but a net income. But again, when you are solving the problems, or otherwise when you are solving the problems practically, don't confuse with the net income and the gross income. So usually the income will be in the terms of the gross income minus of the outgoings. So that will give you the net income. But for your understanding, in all my small case studies examples, I have taken the income itself as the net income. So 1,69,200. So there is a fair purchase price of the property. So nobody will get the property for 1,69,000 like that. For your understanding of the small problems, I have given these examples. Normal calculator we can use. Oh, okay. Checked with the circulars. Okay. Okay. Our office gym engineer checked with the IVBA circulars. See, you can use the ordinary calculator. Okay, not the scientific or the memory calculator. I think for these calculations, you can the ordinary calculator is sufficient. You can use they have specifically mentioned the ordinary calculator, not scientific or any the memory calculator. You can use the ordinary calculator. You can also confirm the same thing with your RVO or the trainee faculties. Here also, more example, municipality has borrowed a 5 lakh rupees and it is desired to pay the said amount with the interest in equal annual installments in 30 years. So this is a somewhat different case study. Say interest in equal annual installment 30 years. Find what will be the annual installment annuity. What will be the annual installment, the annuity payable if interest rate on the loan is 7% and redemption yield rate is 4%. So loan if interest rate on the loan is 7% and redemption yield is 4%. So R this is 0.07. This R is equal to 0.04. So the number of years is 30 years. The total amount is 5 lakh rupees. So you calculate the sinking point. Calculate the sinking point. Sinking point factor is 0.0178. Now, after calculating the sinking point, you calculate the YP dual rate. 1 divided by R plus YP is equal to 11.389. Value of the asset C into annuity. C, that is the annuity. C, that is the amount that is to be invested. That is into YP. So annuity C is equal to loan sum. C, the loan sum is nothing but the value of the asset. So 5 lakh rupees. So divided by YP. Divided by YP. So you will get the annuity. So there is each and every annum. So it has to pay 43,902 to clear the loan of 5 lakh rupees. So with the interest. Okay. So the interest chargeable is 7%. By the same, redemption of the capital is 4%. So at these two rates, it is able to clear the loans. So at the annual payment of 43,902. So this is another example. I think I have shared a number of examples to make you to understand the YP single rate, YP double rate. First of all, what is meant by year purchase, and what is meant by the annuity also I have shown with some one example. What is the annuity means? There is annual installment that can be paid to clear the loan. So see, with the same examples, I have clarified annuities, YP single rate, YP double rate, and also the how to calculate the sinking fund, and also to calculate the net present value or the deferred value. I have covered everything. So with the small examples. So I think with these basics, so you can clear or solve any of the problems in the case studies. See, whatever may be the case studies type, so whether it is the income approach, cost approach, or whatever it may be. So if you are able to understand YP single rate, YP double rate, and also the net present formula and also the sinking fund formula, so you can solve any of the problems in the IBB examination. So any questions regarding this one? So this is a very, very important chapter. So if you want to pass the IBB examination, so you should mainly concentrate on the real estate valuation, this chapter, and also the case studies to get the maximum marks. Because see, otherwise you will be losing the 9 marks here. And also the case studies, about the 22 marks or 23 marks. I have not seen that one. How much marks? Okay, any doubt regarding this YP single rate, YP double rate, and also the year purchase, capitalized rate, annuity? Because I have shown all the small examples. So you just go through the examples, you can understand the meaning of the annuity, sinking fund very well, rather than going through the definitions. You just go through the examples. Any doubts, sir? Hey, we are coming to the end of the session, so nearly 45 minutes is there. So I'm going to complete the another 2 chapters. There is 2 topics: urban infrastructure and its influence on value of the real estate. What is that urban infrastructure? How its influence on the value of the real estate? So that is because your questions will be on the infrastructures, urban infrastructures. So before that, we need to understand urban infrastructure means it doesn't mean wider roads or the buildings constructed as per the FAR or as buildings constructed as per the zonal regulations. So it is not only just adapting the bylaws. Okay, what actually meant by the urban infrastructure? See how these urban infrastructures influence the value of the real estate. Urban infrastructure plays a crucial role in shaping a real estate value. It includes the transportation networks. See, that is very important. It may be a superfast express, superfast railways, metro railways, underground railways, and superfast railways, and express highways, and utilities, public amenities, and digital connectivity. See, that is very, very important. Digital connectivity. See, whenever usually in the metropolitan cities, when people are buying the flats or like that, see, network is there. See, whether we are going to get the network for the phone, whether you are going to get the 5G, 5G network or 4G network, and also the internet network facility. And in most of the buildings, they are asking, since they are buying the cars with the, that is electrical cars, see whether electrical chargers are there, electrical connectivity is there in the charger connectivity is there in the flats or the towers. So they are asking like that. So the urban infrastructure means it includes everything. It may be a digital connectivity, it may be the utilities, or it may be the pollution-free atmosphere. So it may be the sophisticated and the modernized transportation networks, or it may be the anything related to the utility factors such as the malls, cinema, theaters, say clubhouse, park, and the amusement park, and whatever it may be. So anything which is more required for the modernized use. So that we call it as a urban infrastructures. See, urban infrastructure influences the real estate value in the following manner. So we will have a brief discussion regarding that one. Connectivity and accessibility, that is very important. Areas with a well-developed roads, see, that is very important. Highways, public transport systems tend to have a higher property values. For example, metro expansions often lead to the increased demand for housing. Metro expansion. So usually the metro, right? Metro expansions. So metro expansions often lead to the increased demand for housing and utilities and essential services, reliable water supply, electricity, and waste management make properties more attractive to the buyers. See, in the major cities, so usually there is always a problem of water supply. And usually, you may believe it or not, almost all the problems, for example, the smoke problem in Delhi, water problem in Chennai, traffic problem in Bangalore. So these are all the common phenomena. And definitely all these property, all these services, all these infrastructures will definitely have an influence on the real estate. See, Chennai is already facing the problem of water. And it is also in the 2030. So even the Chennai city is going to become a dry, otherwise a hotspot city, otherwise there is a deficit of drinking water. And even in the Bangalore in the 2030, there is a deficit of drinking water. In such cases, what happens to the real estate? And usually in most of the projects of the Bangalore, for example, if you take the case of the Bangalore, they are constructing the house or the flats with by purchasing the water from the water tank. So there is they are getting the water from the tankers, provide tankers, and they are constructing the house. Suppose during the construction itself, if they are having so much of the problem, what about suppose when the occupants are there in the property, how they will supply the water for the entire families, about the 400 families, 500 families? See, it is not so easy. So even the utilities plays an important role. For example, even with respect to the pollution in the Delhi. See, there is always because of the heavy traffic and also the pollution. See, there is always a smoke problem because up to 10 o'clock, up to 11 o'clock, we will not be able to see the things. Otherwise, to have a ride, otherwise to have a ride on the road. So there is a problem in the Delhi, and water problem in the Chennai, and the traffic problem. See, if you want to move from north to south in the in the Bangalore, it will take hours, 1 hour, 2 hours, 3 hours. See how to solve that problem. See, unless the traffic problem, unless the water problem, unless the pollution problem, all these problems are not solved. See, we are not going to say that in future the urban infrastructures are not modernized. We can say that the real estate, particularly the project, will go on appreciating. So usually land value and the building value will go on increasing like that, we will assume. But what happens if this pollution continues? If this traffic continues? If this water problem continues? So no doubt these cities may become the dry cities. Unless and until they will find out some infrastructure, otherwise the modernized infrastructure, otherwise the modernized connectivity, and also the modernized or the otherwise if they are unable to take care of the utilities in future. Okay, it may be regarding the electricity, power, and whatever it may be. So that is why we should give more importance for the urban infrastructure in future. See, because we are going to value the property based on the anticipation. What is anticipation? The expected future benefits, that we call it as anticipation. So that is also one of the fundamental principles used in the valuation, principle of anticipation. So that may be for one more multiple choice question. What is meant by the principle of anticipation? Okay. Now, the public amenities, parks, schools, hospitals, shopping centers, enhance liability, increasing property prices. See, if the hospitals are too far, if the shopping centers are too far, Suppose if the senior citizens are staying in the flat, so how can they visit the hospitals? How can they visit the shopping centers to purchase their daily needs? So that is also a problem. So that is why whenever some urban infrastructures are developed, means it is not only related to the well-equipped roads or these things. It should be eco-friendly. It should be sustainable in future. So by taking all these things into the points, you have to develop the infrastructure. Like the government policies and investment infrastructure project like the smart cities. I will come to this point of the smart cities because I think recently I have seen 2 or 3 questions in the IVV examination related to the smart cities. See, smart cities, I will come to the smart cities afterwards. Urban renewal initiatives boost the real estate growth, economic growth and the job opportunities. IT hubs and commercial centers drive demand for housing, leading to a higher rental yields. So particularly in the electronic city area of the Bangalore, so wherever since there is an IT hub, usually the people are ready to pay more rental for the flats because their job is good and their salary is good, their purchasing power is good, and they want what they want is they used to sit in front of the computer for about 8 hours and 9 hours. They want well equipped and well sophisticated flat which is equipped with a clubhouse, gym, sports club, jogging track, and etc. Because they want some physical activities for their body to maintain their health. So, and in future trends, high speed rail, sustainable infrastructure. So the future trend in the infrastructure will be high speed rail because if you want to move from north of Bangalore to the south of the Bangalore, it will take about 2 hours or otherwise 2.5 hours in the bus or the auto or the two-wheeler or the car because so much of traffic in the Bangalore. Okay. Next, see, the same maybe water problem in the Chennai. Next, sustainable infrastructures. You have to develop this infrastructure in such a way that it should not become outdated after 10 years or 20 years. Any building or any flat constructed, if it becomes outdated in 10 or 20 years, how can it yield an income? Otherwise, what we have to do? See, again, you have to demolish the structure and again, we have to do the reinvestment. So we have to develop the infrastructure and also the buildings in such a way that they should be sustainable for the long time. What about the if the buildings are sustainable for about 60 years or 70 years? So then also they should be in the position to yield the income. They should not be become obsolescent, either functionally or the economically. Hence, a proper planning of the urban cities is most prominent in the criteria which leads to the threshold of the town planning through the proper zoning regulation. Town plan zoning is required for the orderly use of the land, for the effective utilization, and a master plan. So these are all related to the statutory norms and the building bylaws and the master plan, and also the that is the zoning regulations. So these are also very necessary, but these are all the statutory warnings. Beside of that, so keeping in hand the principle of the anticipation, we need to develop the properties of the urban infrastructure for the sustainable future. See, what are the future trends in the urban infrastructure affecting the real estate? See, then what best can be done for the future? The smart cities and the digital integration. What is meant by the smart cities? Smart cities means it doesn't mean that constructing a city or a town or developing a township with the bylaws, with the wider roads, not like that. I will show one slide to give an example for the smart city. What is meant by smart cities? And digital integration should be there because see, high speed internet and 5G connectivity are making the locations more attractive for the business and the residences. Even the resident wants the 5G connectivity. I don't know, in future they may come up with they may come up with the 6G or like that. So Jivan is our staff, our office engineer. So he's well versed with the computer and also the modernized techniques of this building and all these things. So we'll be having a more knowledge on this smart city development and also urban infrastructure. So that is why I'm asking so any clarifications from him. So don't mistake me. So sustainable and the green infrastructure. So after the smart cities and digital integration, so we need sustainable and the green infrastructure, eco-friendly construction. So that is what actually required in the major cities like that, Chennai, Delhi, Mumbai, and also the Bangalore. Renewable energy adoption. Because the population is increasing, Purchasing power, the people are increasing, but the land is limited. Land is limited. Okay, and our demands are more. See what see in the before 10 years or 20 years, we don't want any cell phone at all. Say with landline itself, we will be doing the business, but without the cell phone, no. Nowadays it is not possible. Without internet also it is not possible nowadays. Okay, and everything is a digitalized. So we used to carry cash in the pocket. So 10,000, 20,000 for our expenditure or like that. Now we never carry anything at all. With the only we will be moving it only the credit card or the debit card. Otherwise with the phone. Okay. Next, green buildings and energy efficient designs are increasing the property values. So the future infrastructures will be the sustainable and the green infrastructure, smart cities and the digital integration. I hope that all of you will be able to understand. So your multiple choice questions will be on these things. What is the smart cities and digital integration, sustainable and the green infrastructure? What is a green building? What is the energy efficient designs? So these things. Okay. Improved transportation networks. Expansion of the metro system, expressways, multimodal hubs is reducing the travel time and boosting the real estate demand. So I told you regarding the traffic problem in the Bangalore. Okay, even if you move with a car or the bike or the auto, so to make a move from the north to south or the south to north in the Bangalore, so it will take 2 hours and 2.5 hours or more than 2.5 hours. So the entire time will be spent in the traveling itself. So if so time is precious for everyone. You want to do the business, you want to live happily. See, if you spend 2 to 3 hours in the travel time itself, see how can we do the business? Otherwise, how to spend some time with the family members. So entire time will be for the business, otherwise for the working, and the remaining time will be for the traveling. So we will not be able to give the time for our family members in future. So again, there will be a split up of the dispute in the family. So it leads to the mental torture as well as the physical torture. So that is why, so improved transportation is a must. Boosting the, and it will always boost the real estate demand. Coastal shipping and the last mile connectivity projects are enhancing the accessibility. Rise of mixed use developments. So usually instead of this residential commercial zoning, so nowadays they are promoting the mixed use developments. Mixed use developments, what actually it promotes? See, residential people, if they want to purchase something and if they want to visit the commercial complex or like that, they used to go to the commercial area. Okay, but suppose if it is in the mixed zone means, see, most of the commercial and the recreational spaces will be there in the residential areas also, so that the residential people will be happy with their houses, because even the commercial shops will be there nearby, and also the recreation spaces will be nearby, so that in the zonal regulations nowadays, whenever they are adapting for this master, whenever they are preparing the master plan and like that, they are giving importance for the mixed use developments. Okay, government policies and the investments, infrastructure projects like the driven urban expansion, tax reforms and investment friendly policies are attracting the real estate investors. Okay, what is the mean by smart city? Just I am giving one slide so that you can understand everything regarding the smart cities. See, traffic management, well established traffic management. Next, well established education, well established intelligent shopping, well established smart health facilities, well established internet things, well established public safety. Next, well established gas and water leak detection. Okay. Next, smart environment, that is very important. Air pollution, open data, electromagnetic emissions, smart buildings, and smart home, and smart street light, smart lights, and waste management, and electric vehicle charging. Electric vehicle charging, that is a future trend. That is a future trend. If they are going for the pollution-free atmosphere, they are going for the electrical vehicle. Electrical vehicle means electrical vehicle charging center should be there. See, it may be a flat or the condominium, otherwise individual otherwise. So it should be, it may be a shop. So electrical vehicle charging should be there. Waste management and smart parking. Smart parking because the space is limited. So we should go for smart parking facilities. Otherwise, here and there they are parking. So that leads to the congestion. Even for the people who are walking on the footpath, it is very difficult. And next is the water quality and smart energy. So these are all the future trends of the future of the smart city. I hope that all of you have understood what actually mean by the smart city. So last 30 minutes of the session is there. So just to have a 2 or 3 minutes of the break so that I will continue because all of you might have tired with this marathon class of about 4.5 hours. You just take a 2 or 3 minutes break and you come back as early as possible so that I will continue the last chapter, that is a sustainable development and also the greenhouse building concept. Okay, and so that because that is important because definitely you will get some MCQ on that one. So that is why. So just fresh up yourself with 1 or 2 minutes and come back so that I will continue with the thing. Okay. I also will take a break of about 1 or 2 minutes by taking a sip of water and also a cup of coffee. Okay, with your kind permission. Okay, sir. I will continue with the smart city. So I will show the another smart city concept. So just an highlighter here. You just see this one. See solar battery, bus stop, very good bus stop, the electric bus, copter space, and electrical car, lanterns. That is a problem with the solar, and also the windmill, so provided to pump the water or like that. So this is the future trend or the concept of the smart cities. So don't enter any confusion that the smart city means well-built buildings and these things. So if they are sustainable for a very long time with the future trends and the future problems like with the energy, water, transportation, etc. So that city we call it as a smart city. So usually in almost all the states, they have taken initiation to build a smart city nearby to the towns like the Bangalore or Chennai or like that. They want to develop our own smart cities like that. So if you come across any smart cities, so you just share those slides to me. So these are all the policy instruments. So yeah, because so even the government is also promoting some or framing some policies to develop such smart cities by giving the TDR, by compulsory land acquisition, by the sale of the public land, and the repaying the debt, etc. And so now I will come to the last chapter. There is a real estate market and its characteristics, investment in real estate, factors influencing the demand in the supply schedule, and scheduling the real estate. See how to make the investment in the real estate, and so what are the characteristics of the real estate investment. I think most of you are doing the real estate business, where buying and the selling of the sites. Otherwise, if you are not doing the business, at least you have purchased a site or a building for your future, so that by deciding that the real estate investment is a sound investment, otherwise it's a better investment. Okay. So in the demand side, following factors are relevant. One is the population changes, economic growth, and the accessibility and the inflation. So that is why when you purchase a property today, so either a piece of the land or whatever it may be, after 10 years or the 20 years, that will be doubled or the tripled, because the population changes, economic growth, and the accessibility, and also the inflation. So next, change in the taste and the size, choice of the people. Okay. So next one is population changes. As more and more people migrate in the area, then there is an increase in the demand for the land. So there is a reason behind the increase in the rates of the land for the cities or the towns. Economic growth. As an economic growth, there is a more investment in the infrastructure, industries, commercial sectors, and services. The living standard of the people rises, and the per capita income also grows. So the overall demand for the land increases. Next, accessibility. As a nation undertakes great road building programs, when compared to the 10 years back roads, nowadays the roads are modernized and express highways, national highways are improved to the maximum extent. New railway communication, establishing the aerodromes, etc. And there is an overall change of accessibility. The remote of the parts of the country became connected with the urban centers through the improved accessibility. Again, the replanning and the redevelopment of the existing road networks and within the urban areas improves accessibility, increases the demand for the land for various uses. Inflation. During the inflationary times, investment in long-term government securities or other fixed interest rate is not secured in the real terms. See, because either the fixed deposit, otherwise some securities or the debentures which you have purchased. See, that may not be able to overcome the inflation in future if you have made an investment in the fixed deposit or like that, because the fixed deposit will fetch you the 7% of the interest, whereas the inflation or the net present value of the property, the net present value of the money will be around, it will be reduced by the 10% or the 12%. Otherwise, less than the, somewhat greater than the interest we are going to get. So the present value of that 100 rupees will become the 90 rupees. But whereas your income earned on that 100 rupees will be only the 7 rupees. So you'll be losing the value. Net present value of the money goes on decreasing because of the inflation. Only I think the real estate will give you the solution for the inflation, because it is always an edge against inflation. So that will be your multiple choice question in the examination. Okay. Changing the taste and the choice of the people, the living standards. So usually, if you remember your olden days, suppose if you are aged more than 60 or 70, if you are young, I think you may not be knowing. See, the people are happy very with the joint family, and they will be having the only one bathroom and the one toilet in their house for the entire six members family or 8-member family, and they are always happy with one toilet and the one bathroom. But nowadays it is not like that. Even our children want their full privacy, and they want room and a separate toilet, separate bathrooms. and each and every members they want an independent room with an attached bath. So not only with I gave only small examples, and the taste and choice of the people. Without internet facility, I think the youngsters will not be there, because they always do the business with only the net. Without net, there is no business at all nowadays. It may be a software or any business related these things. Internet is a must. So change in the taste of the taste and also the choice of the people. So there will be one changing. So that is why usually all these factors plays an important role in making an investment the right thing in the real estate. Factors that go to the supply and the for landed property. See, property development is a time-consuming process. So in the short run, and therefore when demand of the land area is increasing, say by the population growth, so redevelopment of the underdeveloped sites and also the development of the virgin sites that they take place, thus contributing to the fresh supply of the goods in the property market. Since the land is limited, I have explained several times, land is limited. The supply of the land in the long run cannot meet the demand continuously rising. So that is why they are going for the vertical growth in the cities, 20 floors, 25 floors. Next, the basement 1, basement 2, basement 3. So because the parking facilities for the basement were not sufficient, they are going for the one more, basement 1 to basement 3. I don't know, they are going for, so that is why they are having the earthite also. Earthite means they can dig up to 3 floors, 3 basement, 4 basement, etc. And they can go up to sky. So 20 floors, 25 floors. Okay. Landed property being a durable, see, it is land is a durable. It is a supply cannot be reduced. Once constructed, the demand suddenly falls, and as a result, the prices war. And in order to avoid further capital loss, the suppliers may be compelled to sell the property at a reduced price. So these are all the just theoretical aspects to decide. So where to invest, when to invest, and whether on the land and whether on the building. See, if there is a frequent buying and the selling of the sites, it is very wise to purchase a site in the outskirts of the town, because there will be constant buying and selling of the sites. So no doubt after 10 years or the 20 years, the site value will be doubled. But there is no meaning in purchasing a site in the CBD area, that is central business district, and leaving that site for about 10 years or 20 years, because it is a saturated area. So if you leave that site vacant in the central business district, so you will be losing the value. Why? Because you will be, suppose if you construct a building, then only you will get the rent or like that. So that is why you should make out the difference, where to buy, when to buy, and when not to buy, whether to buy a vacant flat, or whether to buy a constructed house or a commercial complex or like that. So we have to decide before making an investment in the real estate. So now I will come to the point of suppose if we make an investment in the real estate, what happens? So whether it is a good or bad. So I think all of you are the senior engineers, so will be well versed with where to make an investment in the investment either in the bank or in the real estate. Okay, see, if you make a deposit in the fixed deposit, the fixed interest security is a financial claim which promises the fixed rate of interest. See, it may be in the bonds or the debentures, suppose otherwise a fixed deposit in a bank. So if you invest money, so you will get some fixed interest rate. So we don't know whether it is going to overcome that inflation or not. If it is unable to meet the inflation, you will be losing the money. Otherwise, you are the net value, otherwise the NPV, the money value will be decreasing. Okay, if you are invested that 1 crore rupees, say 1 lakh rupees, in the next year it will become the 90,000. Otherwise, after next year it will become 80,000, because it fails to meet the inflation rate, because the bank will be giving the 7% or the 8% rate of fixed rate of interest. Okay. Now, what is the difference between, you may be investing in the bonds and the debentures. What is the bonds and the debentures? So definitions and also the differences also have made a small note, so that for your preliminary understanding the difference between the bonds and the debentures issued by the government and the corporates. Usually the bonds are secured by collaterals and cannot be converted into the shares. Safer and lower returns, particularly these bonds, safer. Okay. Next, debentures issued by the private companies and secured or unsecured. It may be secured or unsecured, can be converted into shares, slightly riskier and high returns. in the debentures. So there is a difference between that. So first one is the savings bank account, and the second one is the fixed deposit receipts, and the third one is the bonds and the debentures. So they're all the government securities. I have given the clarifications regarding the what actually mean by the bonds and debentures, and what are the risks associated with those things. And now I will come to this point of the equity. And equities are ordinary shares. So I'm talking about only the shares. So equity means not only the shares. It may be a partnership with a company also. Okay. So for your understanding, I'm just talking about only the shares, ordinary shares. Because suppose if you make an investment in the equity or the shares, so you will get some amount. See, equity or shares. See, it may be a company. If it is a public traded company, so it may be a shares. Otherwise, if it is a private company, if I am having some partnership deed or like that, if I have a partner, I may be a sleeping partner or an executive partner, I may be having an equity in that company because by investing some amount. Okay, so that we call it as a equity. Now, for your understanding, I am also talking about the shares. Suppose if it is a public traded company, so we are talking about the shares. So otherwise, if it is a private, it may be equity, maybe some partnerships, otherwise some partly ownership also. Okay. Suppose now we will come to the point. This there is a yield. Greater the security of the capital, lower is the yield. Greater is the security. So that is why. So banks, bonds, government securities. So they give the very less rate of interest, but they are secured. They are secured. And see, lower rate of interest, but they secured. And suppose if it is a bank deposit means, so easily liquidifiable. And greater security, regularity of the income, lower is the yield acceptable. Greater the liquidity of the investment, lower is the yield acceptable. Lower the cost of the transfer, lower is the yield acceptable. So particularly that is why the senior citizens go for the fixed deposit in the bank means so easily liquidifiable for their needs like the health or whatever may be their issues, and they will get the handful, otherwise happiest and hassle-free interest. So they are not worried about the inflation because they are all senior citizens. And who can take the risk? The youngsters can take the risk. So one who is between the 20 to 40 or like that, in between that age, so they can take the risk and they can make an investment in the real estate. Even for in making an investment in the real estate seniors, so we should not give the advice, because whenever we make a investment in the real estate, it is not easily liquidifiable. And in the short term, it will not yield the much amount. In the short term, if it is for the 5 years, if it is for the 1 year, if it is, see, I have got some money and I want to purchase a car after 1 year or 2 years, and there is no meaning in investing that money in the real estate. See, it is better to keep that money in the fixed deposit and to purchase a car. Otherwise, keeping some money for the marriage of my daughter after 1 year or 2 years, so it is not a wise to keep in invest on the real estate. See, usually real estate means so in the long run only it will yield the amount. Okay, even the shares. See, I will compare the shares and also real estate investment outwards. See, what are the advantages of the real estate investment? I will come to this point and I will clear the syllabus. There is a diversification. Real estate investment is a powerful tool to add a valuable layer to the diversification. Reduces overall portfolio risk. See, here, suppose if you are invested money in the shares means whenever you are buying and selling the shares, suppose if you get some profit, you have to pay the capital gain. So you have to pay the tax. You have to pay the charges to the there is a brokerage and everything. But if you make an investment in the real estate, it is not like that. It is just a one-time investment and also the tax free. So that you will get the tax whenever you sell that property after 20 years or 25 years, it may attract some capital gain or like that. But so you will not get a burden of paying the tax each and every year, and there is no pain of or the headache to pay the taxes annually or the year wise, etc. And see, In case of real estate under the leverage, it means using the borrowed capital. Even some people, suppose if they are having about 80 lakhs rupees, they will purchase 1 crore rupees property by borrowing the 20 lakhs capital. Because the banks are financing for the 7%. Financing such projects or the buildings or the residential building for the 7% rate of interest. But in the real estate, after they are going to get the yield of about 10% or the 12% or 15% in future. So there is a leverage. So in the real estate, and one is a diversification, and another is a leverage, and also the interest rate. You see interest rate, because the banks are giving the lesser interest rate, whereas we will get more remuneration. So in the real estate, I am comparing investing in the real estate. So you just see this one. So properties, rates, mutual funds, ETFs, and the private funds. So benefits, tax breaks. If you invest the money in the real estate, so tax breaks, and diversification. So it will be growing like anything, and it is not for the short time, because the liquidation is not easy. And regular income. Suppose if you have purchased the rental yield property, it will be giving the annual rent. So there will be a regular income. The asset is secured and the income is secured. So inflation protection. So that is why the real estate investment is hedged against inflation. The inflation will be around 6% or 7% annually, but the property rate will be increasing at the rate of 10% and 12%. Otherwise, in the major cities, it may be 15 to 20%. So it is always, it gives a protection against the inflation. So best commercial real estate investment strategy: identify your investment goals and explore different financing options, plan well with the exit strategies, stay updated. So these are all the investment opportunities. The next one is the other people's money. So borrowed money, also we can make an investment in the real estate. So keeping in the view of the interest rate and everything. Appreciation, investing in carefully selected real estate investment gives the combined benefits of the leverage as well as the value appreciation. So for the bank we are paying 8% of the interest, whereas the value appreciation will be in the terms of the 12% and 15%. So that leverage is also, that is we can enjoy that appreciation. So mortgage finance is reduced by every month, while the property value increases over long term. So that is also another benefit. Mortgage finance is reduced by every month, resulting in increased equity with the creation of the wealth. So that is the beauty of the real estate investment. So next, capital gain profit, there is a 50% gain is tax and 50% is free. Say because so we are doing the valuation for the capital gain, so almost all the property value will be arrived at that time, and so usually 50% will be free, and 50% we have to pay the capital gain tax. So we will be happy with the tax, we will be happy with the investment, and we will be getting the lump sum amount. So these are all the benefits of the real estate investment, but it is for the long term cash flow. Usually long-term cash flow means, suppose if you have purchased a commercial property, means it could be giving the rent for about 10 years, 20 years, or the 40 years, because the lifespan of the building will be around 60 years. So throughout its life, and even the rental income will be increasing year by year, it will be increasing. So the long-term cash flow will be there. Okay. Again, if you make an investment of that is a long-term cash flow, so you will become rich and a wealth person. Okay. So stocks versus real estate. See, so there is a major difference between the real estate and see, it is a sound investment. Real estate investment is a sound investment, whereas in the stocks or the shares, see, it will be fluctuating like anything. It will be fluctuating daily or yearly. See, for example, those who are having a knowledge of this stocks and the shares, I think they may be having, they may be knowing in the since from the last 1 year, even the Nifty or the Sensex, they are facing a problem. That means they have gone below the investment, or they have come down like anything. And most of the people have suffered a major losses. The entire country and those who have invested in the stocks, they have suffered a greater loss since from last 1 year. See, it may be Nifty, Nifty 50 or otherwise the Sensex or whatever it may be. But real estate, it is not like that. It's a sound investment and edge against inflation, but the immediate liquidity is not possible. And once if you make an investment, you can feel free from the mental. You'll be enjoying the peaceful enjoyment. But in shares, it is not like that. Daily, it will be fluctuating. Daily, you have to, even though it is not daily, either once in a month or once in a week, you should see the balance sheet and also the portfolios and also the commercial activities and the quarterly statement of the companies. So where actually you have invested. So you have to take a pain. Of course, sometimes what happens is the stock market will fetch you like anything. So it may fetch about the 12% or the 15% in the mutual funds or the stocks. It may be higher than the real estate, but here the consistency will be there in the real estate. Here the property is secured, that a physical asset or the tangible asset will be there, and here the property is more secured, and the income will be regular, and here the income is not regular, and it is more risky when compared to this real estate. Okay, so these are all the features of this real estate and also the stocks. I hope that what best can be, what amount that best can be invested in the real estate. I think you can clarify yourself. So these are all the characteristics of the real estate investment. Now I will come to the last point. There is only one point is there in the syllabus. There is a concepts of the green building. Why green building? Green building concepts, rating system, and green building valuation. So I will just highlight on these the four concepts. Okay. So this is the basic problem related with the major cities. One is the climate change, global warming. Blue is cool, red is hot. Why? So this is the map or the map given by the NASA, shows the temperature changing. Climate changing. See, blue, climate change. So global warming. So this needs to be a global warming. Not necessary to explain much what is the reason for the global warming. So the threats of climate change will lead to the floods, droughts, storms, of fire, of earthquake rising. Because you're all engineers and technical persons and valuers, experience and all valuers. So if I give this much of note, I think you can elaborate anything. Because earthquake, rising sea levels, endangered species and the plants, no drinking water, starving humans, etc. So these are all the problem related with the climate, threats of climate change. Then what is to be done? See, what is the root cause? Root cause is the environmental pollution. What is the greenhouse gas emission? What is the greenhouse gas emission? I think all of you know what is the greenhouse effect and everything. So it is related to the carbon dioxide and carbon monoxide. So you just go through any environmental, otherwise in the net also, a lot of materials are available with respect to the environmental pollutions. Whenever you are free, just go through it. I will come to the direct point and regarding the sustainability and the building sector. Why we need to construct a building with a sustainable future, and why we have to concentrate on the building sector. See, the 50% of the material resources taken from the nature are the building related. 50% of the, it may be the wood, the tiles, or the sand, stone, and whatever it may be, they are taken from the nature. 50% of the material resources taken from the nature of the building related. Steel and whatever it may be, they are all from the nature. Okay, 50% of the national waste production comes from the building sector. So that is very important. Whatever the 50% of the national waste production comes from the building sector. All types of waste. So this would be the multiple choice question. 50% means, so the people will be thinking 25%, 10%. No, 50% of the national waste production comes from the building sector. So that is why we need to concentrate more on the, now you just see the pollution problem. See, millions of metric tons of the carbon. So most of the things in the MCQ, they will click for the transportation. They will click for the transportation. See, contribution of the pollution in the atmosphere from the transportation of the traffic is only 27%. So in the MCQ, most of the values, they fail to click these buildings because the buildings will contribute to 48%. So usually they will click on the transportation or the traffic, and otherwise the industry, which is about 25%. Now you just see the graph, you just see this pie diagram. So buildings will contribute more. 40% of the global energy consumption is building related. See, that is also very important. 40% of the global energy consumption is building related. 50% of the global greenhouse emission is due to the buildings. So it will never come down less than the 40% or the 50%. Either the pollution or the energy or whatever it may be. So when such is the case, what is the future trend in valuation? What, how to assess the value after the 5 years, after the 10 years, after the 15 years? Okay, nowadays itself we are facing so much of problems. Now, what actually mean by the green buildings? Built green buildings or the sustainable habitat. The objective is to evolve strategy to reduce energy. Reduce energy use in buildings so as to reduce the energy cost and also the greenhouse gas emission into the Earth's atmosphere. So that is the concept of the green building. A green building is designed, constructed, and operated to minimize the total environmental impacts while enhancing the user comfort and the productivity. So that is the concept of the green building. Okay, qualitative and the quantitative measurements. So it is not very easy to assess the value for the green buildings. So I think so. A lot of energy is to be spent and application of mind is required to value the green buildings, because the energy rating plays an important role and certification plays an important role in the valuation of the greenhouse. And the GRIHA, see, that is very important because in the examination they are asking these questions. Green rating integrated habitat assessment. There is a national rating system. So this is the Indian national rating system for the greenhouse buildings. Next, I will just share this slide is to understand what is a green building. What is a green building? See, if that green building is a sustainable site planning, so there is a green building, and photovoltaic generation, the solar is installed with that flat and everything. Rooftop planting to keep this flats cool or the entire project cool. Rooftop planting is there. Photovoltaic generation is there, and automated ventilation control. So that we call it as a daylight harvesting. Daylight harvesting. So in the daytime, the light or the entire energy is stored, and in the night it is used. So okay, so that we call it as the daylight harvesting. Improved insulation. So instead of using the air conditioning system, so we can go for the insulation of the walls and everything, and automated ventilation controlling system. Lighting controlling using the natural light. So lighting control using the natural light, lighting control using the motion detection sensors, and high efficiency light fixtures. So like the LED and whatever it may be. Restriction of sunlight, and rainwater utilization system, and zero water discharge, high efficiency heating equipments, and rainwater harvesting, and recycling of the water. Okay, so these are all the. So this will show the concept of the greenhouse. Okay. Now, green building rating system. Green building rating system. A green building rating system is an evaluation tool that measures the environmental performance of a building through its life. So, how to measure it? So, there are globally identified certification authorities. So, they will give the ratings for this greenhouse building based on the certification and based on the information given by the environmental specialist. So, based on, we are going to values building that we are going to save, how much benefit you have got, and so what are the future benefits. By taking into consideration, we are going to value projects. Now you need to understand this one is a BREEAM, successful international rating. So in India, GRIHA is the international rating system. In the BREEAM, Building Research Establishment Environmental Assessment Method, was developed in the UK. See, this is not belongs to the India, but the Indians, they have adapted some of its theories and the basic practical concepts in our GRIHA national rating system. Okay, so this BREEAM belongs to the UK. Next, a successful international rating system, that is a CASB. So comprehensive assessment system for the building environmental efficiency was developed in Japan. So this belongs to the Japan. They are also the assessors or the they also developed some norms and the standard for the rating of this greenhouse building. So successful international rating programs, and this is a lead is a US based, and some of the projects they are also the foreign based. Or whenever they are launching the international projects, so they used to get the certification from the lead, because leadership in energy and environmental design was developed and piloted in the US in the 1998. It is a US based rating rating program. And what about the Indians? The Indian Green Building Council has adopted a lead system and has launched a Lead India version. See, they have adopted some of the lead system and adopted a Lead India version for rating of the new construction. Next, Indian Green Building Council, IGBC, has launched several other products for rating of the India different typologies of the buildings, including the homes and the factories. So you just concentrate on this lead, what actually meant by the expansion of the lead and what is meant by this IGBC, that is Indian Green Building Council, because in the examination they will just give this IGBC, how to expand it, what is the name for how to expand this abbreviations, and key components of this lead system, that is sustainable sites, water efficiency, material resources, and indoor environmental quality, etc. So innovation design process. So these are all the related to the there's a green building concepts, particularly Griha is related to the Indian rating system. So this is the points which are going to give based on the projects. There is a star 1, star 2, star 3, star like that. See, there is just a rating criteria. And I think I have tried my level best to make you understand this real estate valuation, theoretical as well as the calculation portions, to my best of my knowledge. And I would like to share the few more slides with respect to the 3 projects. So that is a wonderful projects. So that one is so this is a sustainable project in Pune. It's a Godrej Green Cove. Godrej Green Cove. Features of the, see, what are the special features? They have adopted the greenhouse concept. There is a rainwater harvesting, solar powered common areas, and sustainable materials are used in this project. So Godrej Green Cove. So there is one of the example for the greenhouse project in India. So this is in the Pune. So if you are from the Pune, otherwise whenever you visit the Pune, you will just visit this project, Godrej Green Cove project in the Pune. And one more project is there, that is in Mumbai. There is a Tata Housing's Amantra. So it is a project and it is a LEED certified. So it is a US based rating company and it is a LEED certified, LEED gold certified with the energy efficient lighting and the green roof. So Amantra. So it is one of the wonderful projects. So if you are anybody from the Mumbai based valuer, I think so they may be knowing this one. And I don't want to leave Bangalore being a Bangalorean. So it's not like that. I am just staring some slides. So it is a Chennai Mahindra Happiness. I think so one valuer is from the Chennai. It's a Mahindra Happiness. See, it is a greenhouse. It is a green building concept is adopted in this project also. Green homes with optimized natural ventilation. So IGBC certified. There is Indian green so Indian Griha based certified company. So this project is optimized with the natural ventilation. Mahindra Happiness in Chennai, and from Bangalore, I think Brigade Orchards, Bangalore. So in this project, I think it is in the Devanalli like that. There is smart energy meters and efficient HVAC system. That is the HVAC, heat, ventilation, and also air conditioning system has been adapted. So by giving the walls to the proper thermal insulation and also the efficient smart energy meters are installed to give the to adapt the greenhouse green building concept. I think so. These are the few projects and which are the few examples so that you can remember the concept of the greenhouse building. So once again, I would like to say my thanks for all of you to for your kind patience to bear with me for about 4.5 hours of the wonderful MEP session. I hope that all of you have enjoyed the session. So, and feel free to ask some more. Even though the time is up, I will request the RVO to give the 5 minutes of the time. If you are having a doubt, you can have an interaction. And I would like to say my thanks to the Rahul Sarma Shah of the WA RVF and also the Akshata Madam and also the other executives who are the coordinators of the WA RVF to give me an opportunity to share my knowledge with the MEP IBB aspirants. I hope that all of you enjoyed the session, and I would like to, on the Friday, again, I'm going to meet you with a few case studies. So feel free to share your MCQ to my WhatsApp number so that I will be able to give the answers. So if you are having any questions, so we can please ask. Okay. And don't forget to give your feedback to the WRBF regarding my presentation or like that.
आप में से किसी का भी अगर सर के लिए कोई सवाल हो तो आप यहाँ पूछ सकते हैं, बेझिझक वो आपको जवाब देंगे। अदरवाइज हम यहाँ पे सेशन फिर क्लोज करेंगे। इशफाक साहब,
ओके ओके सर।
या किसी का भी कोई सवाल हो? इट्स ओके सर, यू कैन कंप्लीट।
Okay, sir. Thank you and all for your kind coordination and also the
Thank you very much, sir.
cooperation.
Thanks for your time.
Thank you, sir.
थैंक यू वेरी मच, थैंक यू सर। हम आज का सेशन यहाँ पे खत्म करते हैं। अब आपको जितने प्रेजेंटेशंस हैं हमारे सभी फैकल्टीज के, वो आपको कल परसों में रिसीव हो जाएंगे। और नेक्स्ट वीक के लिए शेड्यूल में अगर कोई फेरबदल होता है, वैसे तो आपको आई थिंक शेयर कर दिया गया है, मगर बाय वेडनेसडे और थर्सडे आपको शेड्यूल मिल जाएगा नेक्स्ट 3 क्लासेस के लिए। अब अगले शुक्रवार फिर से मुलाकात होगी। थैंक यू वेरी वेरी मच, गुड बाय, टेक केयर।
Thank you.
थैंक यू अनुपम जी।
Thank you, sir.
आप सभी यहाँ पे लॉग आउट कर सकते हैं। थैंक यू वेरी
Thank you.
मच सर, थैंक यू।